Hey guys, so we're gonna start top of the hour, so I'll see you guys 7 p.m. Hey, hello everyone. Welcome to another Spaces with me, Kalu Aja. We do this every Saturday. We talk about money, the economy, and of course, personal finance and investment. We want to talk about money, but we want to talk about it, how it affects you personally, right? And every time, I do all the talking, we have guests over and we talk. So let's have a week where we hear from you, right? Let's hear from you how your 2022 went. And what you were able to say achieve financially. What were your plans? What were your goals? What stopped you? Was inflation really a big thing for you? And how did you get around it, right? So I had brought a guest here, but when Spaces had cancelled, Twitter had cancelled Spaces. So we had rescheduled, but they brought it back. So my guest really can come back. But I'm here, and we can have a good time talking and listening to you folks. The way I wanted to run is if you have a question, right? You can ask, and then we'll all try to learn together. Just to caveat and put all the disclaimers, right? I'm not holding myself out as a financial advisor on the Spaces. I'm not your advisor. We're not giving investment advice, nor are we offering you anything to buy or sell. This is all educational. We are simply sharing opinions, and you should always consult your financial advisor before you make any investment. Stocks have the ability to lose money, and past returns are not a guarantee of future returns, right? So, with all that disclaimer done, if you want to hop in right in and speak, I will let you do that. I'm going to share a few slides as well and just talk about a few slides also on this space. So, if you want to do that, you are perfectly okay to just request to speak and I'll let you speak. But let me just give you an overview, right, of what has happened in 2022. And I'm going to start from 2021, right, from 2021. When we were going into 2022, 2021 was a year of very low interest rates. The dollar interest rate was very low. The Nigerian stock market was doing pretty well. I don't know if you guys know, but in 2020, right, the Nigerian stock market was the number one stock market in the entire world, right? And that was based on the back of the Dangote share buyback. So if you had invested in the Nigerian stock market, you were getting the best returns really on earth, right? Same thing with the Naira. It wasn't that bad as it is now, and inflation was not as bad as it is right now. So we're pretty optimistic. We're coming out of COVID, and there was going to be a lot of spending, and we're going to reap that spending. But guys, 2022 brought the Ukraine war, and what that war brought was the uncertainty and the inflation. And you've seen the U.S. interest rates go up. That has changed the entire picture. No one saw that Ukraine war. No one even saw COVID, right? So the point I want to make is this: when you are planning, you really don't know what's going to happen. We can all plan and say we want to do this, I want to do that, but in 2023, no one knows what's going to happen. So how should you approach if you're investing in 2023? You have to do what I call objective-based investing, which means you want to ask yourself, what is my objective? Why am I putting money away? You've got to save. And when we say save, people always argue, oh, you have to save or you have to invest. Let me explain what the difference to you. If you earn money and you don't spend it, you've saved it. Once you don't spend your income, you have saved your income, right? But there's no thought process towards saving. If you give a child 100 naira and the child does not spend that money, the child has saved. The difference with investing is that investing is planned, you have an objective in mind, you know what you want to do. So when you save, that means you haven't spent, right? You have to save first, then you invest the surplus. When you invest, you say, hey, I have a target, I want to hit this, and this is why I'm investing. I'm investing because I want to have built a house, I want to retire. When you do that, that statement, that is the most important thing in your investment journey. Once you get your statement right, i.e., your goals, then you can do what's called an asset allocation, which means that you buy assets or you invest to meet your objective that you have stated. So I'll give you an example. If I am a 25-year-old Nigerian, right, and I'm going to retire when I'm 65, so I have almost 40 years to invest. That's my objective. And my objective is say I want to invest to retire. So my objective is to retire 40 years. The sort of investment I will buy is going to be very, very heavy in equities. So I'm going to buy lots of equities. I'm going to invest in the stock market. I'm going to invest in all those quote unquote riskier assets. Because at that age, I'm in what I call the accumulation stage, and I want to grow my assets. Possibly my income is lower. When I start to work, I'm going to earn lower as I'm 25 than when I am going to be, say, 50 years old, right? So at that young age, I don't have enough income. It's possible I'm going to buy a lot of my assets by borrowing. So I want to basically accumulate assets. If I'm borrowing money, I'm buying assets. If I'm saving, I'm investing in long-term equity-based assets. What is equity? Ownership. That means in Nigeria, for instance, I'm investing in the companies that are creating products and services. And I give you an example, just an example, guys. I'm not recommending you go buy this, just an example. If I'm buying Dangote cement, right, I'm investing in the profits and the losses of Dangote. If Dangote supplies cement and the cement is used to build roads and infrastructure, then I am a partner in Dangote's success story, the Dangote cement success story. So I'm buying into that equity. If it goes up, I rise with it. If it falls down, I fall with it. But I want to do that if I have a 40-year or 30-year or 20-year horizon, because I have a longer time to invest and I can absorb volatility. What's volatility? That risk. We don't know what's going to happen. So if I invest in equities, it's going to be for a longer period because I can absorb the risk and my objective is long term. Why shares? Because over the long period, equities, right, have been seen to tend to beat inflation. Inflation is the problem. So inflation is the devil, right? If there was no inflation, we will simply take our income, bury it in the ground, then when we retire, we take out that income and we spend. But because there's inflation, guys, it reduces the purchasing power. So if you earn ₦1 million in 2022, that 1 million will not be worth $1 million in 2060. That's why we're investing, right? So I different objectives, different asset classes. If I was a 50-year-old Nigerian about to retire in 2 years' time, then I would not put a lot of my money in shares. Why? Because I'm about to retire and I need a lot of fixed income. So when I retire, I don't have the ability. Let's say I'm 65, I don't want to work again. I don't have the ability to go to work and start to hustle again. So whatever I have made, I want to put it in something that's more stable that would then pay me a return. Now, you see, these are two different people, the 25-year-old and the 65-year-old. They are both different, they have different objectives, hence, they invest differently to hit a different objective. Shares are not better than bonds, and bonds are not better than shares. The difference is your objective. Hence, the most important thing to do when you're investing is to get your objective correct. Why are you investing in 2023? Once you answer that question, then it's easy to walk back and say, okay, if you want to invest to beat inflation, do this. If you want to invest to retire, do this. If you want to invest because you want to grow your principal, right? You want to trade and expose your principal to risk, then do this. So, guys, the word is that investment based, objective based investing. You want to invest with an objective in mind, not to make returns. Get it right. If you want to invest in the market and you chase returns simply, you are not doing it the right way. If you want to if you are in Lagos and you want to take bags of rice, 20 bags of rice to Kano, you're not going to buy a coupe. You're not going to buy a small sports car to go to Kano with 20 bags of rice. Rather, you're going to get a truck. So the truck isn't better than the coupe, the sports car. The truck is simply what you need to go to Kano with 20 bags of rice. The same thing if you're going to go on a date down the road with your girlfriend or your boyfriend, right? You need a sports car. So you're just going to go here to there with your date. You go on a sports car, you go have dinner, you come back. You're not going to take a truck to your date. It's too big, it's too cumbersome. In the small, sleek, beautiful sports car, you go in and you come out, right? That's the whole idea. Your objective determines what you buy. There's no best investing, there's no best share, there's no what should I buy. Rather, you should ask, what is my objective? This is what I want to do. This is the amount of risk I want to take, right? Then you then say, how can I achieve that objective? That's the opening, guys. So the floor is open. I just want to make you guys understand that. I hear people all the time, what should I buy? Don't ask what should you buy. Rather, try to work with an advisor to say, what should I be doing? What's going to happen in 2023? And what should I do? And I'm going to, so if you want to speak now, just request. But the main thing to know in 2023 is that the US is looking like it might go into a recession. Everyone is saying they're going to go into recession. The problem is, how long will that recession be? If it's going to be a short recession or a long recession. If it's a long one, then we're going to be in trouble, right? If we're in Nigeria. Why? Because markets sort of reduce, right? If China, second largest market, US, largest market, if they go into a recession, what it means for you is that you export less oil. If you export less oil, your country gets less money. If your country gets less money, you get less dollars in your foreign reserves. If you get less dollars in your foreign reserves, then you have the ability to, you can't defend your naira, and possibly you then have to borrow to meet up that gap, which then might lead to inflation down the line. The big story in Nigeria is the elections, because the elections will drive the policies that you will see in 2023. So that's for Nigeria's a big issue. Whoever wins is going to have a different economic policy, and that's going to be your number one thing you want to watch out for. All right, let's go to the floor real quick. I've got Mike Powers. Mike, how are you doing today?
Hi, Carlo. I'm good.
Great. What's
Yeah,
the bro?
it's actually you. I've actually been getting a whole lot of this investment, the updates from your end, the journalist. So thank you very much. Anyway, my number one, putting my money where my mouth will be in 2023 will be developing my 3 mining sites. I just got the exploration license for the sites from the FG here. Um, I have gold there. We have quad higher ore. We have Fespa. Yeah, so I hope we discover more anyway. So I will be putting my who can come for partnership, and I can actually develop. First, start with the quartz, the quartz sites. That be my number one
All right.
objective. I know I'm a defense guy,
So
but I had to diversify my portfolio as well.
okay, so you're looking at you're doing like investing in Nigeria in the solid minerals, non-oil sector. That's what you're basically going to do in 2023.
Yeah, exactly.
Yeah, I like it because there's going to be in 2023, whoever is the president is going to focus on non-oil. Currently in Nigeria, the non-oil sector is what's driving growth, not just the growth,
Hmm.
but also the revenues. Nigeria is making no revenues from crude oil. All the revenues we make either is not coming to the CBN, or it comes and we need to pay the subsidy. So all the dollars you see in Nigeria today are from non-oil. The non-oil revenues are going to pay subsidy. So if you are in solid minerals, you are in agriculture, you are in services, you are in trade, that's your money that we're using to survive, quote unquote, right now. So it's a
Hmm.
solid place to be, solid sector to go into. If you can
Yeah,
government plans, you can get your investors, get your long-term funding,
yeah.
solid sector to be in. So yeah, I wish you the best. But in terms of personal side of it, apart from your, what are you doing different? What habits are you going to change out? Are you going to have a budget? How are you fighting inflation? I want to hear about the personal side as well.
Okay, for the personal side, I think I was able to cut down, the cost of running my office, as well as running the house. We got the essentials. Make sure we pay for the we just pay for the basic services and the things we need, and cut cost of places that really don't really matters. All the big items and in my the big ticket items, obviously, I just basically strip them. I'm changing my TV. I'm using the LG C1 series. It's still sharp. It's still good. I'm not going for the I will still be using this one. I know I bought it for 1.5 million here. So it's still very good. I'm not gonna be changing the car.
So in
Yeah,
essence, you're going to spend
saving a whole
money.
lot.
You're not
Basically,
going
and
to
you're
spend.
keeping the dollar tight. Yeah.
All right, great. So you're not going to spend a lot of money in 2023, right? And this is the problem, right? Because if everyone doesn't spend, then the economy does not grow. Many people are
No, I
going to.
mean this year. I mean this 2022. I've been basic. I really cut down the this big ticket items.
Gotcha. Excellent. I hear
Because
you. So guys, if you look
this
at the
money,
Twitter,
because I basically know that the economy work like a machine.
yeah. So, Mike, let me stop. If you want to invest, guys, a good plan for you to have for 2023 is to try to look at the budget and try to ask yourself, where will the government of Nigeria spend money? If you know where the government of Nigeria is going to spend money, then you try to get in there. Where do you think whoever is the president, what sectors do you think they're going to spend money on? Number one, they're going to spend money on infrastructure. Whoever the
Yeah,
president is, they're going to spend money on infrastructure. So anyone you see that is doing maybe cement, that is doing iron rods, that is doing construction, right? You want to look at those guys, right? Construction. Number two, they're going to spend money on agriculture. They're going to spend fertilizer. They're going to do NPK, all that stuff to do with fertilizers, value chain, processing, all that's going to happen as well. So anyone you see doing construction, doing agriculture, that's where you also want to try to look at in 2023 as well. What about telecom? We have the new cashless banking policy. We have telcos now have banking license, which means they can receive deposits. So let's just say they have payment license, right? So that those telcos are going to grow into a very, 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 very large market, right? So I see a lot of growth also in that sector of the cashless banking, fintechs, POS. That's also going to be another big sector in the economy. So construction, agriculture, services. This is where they're going to spend money. So if you're trying to invest money, you want to ride with the government because the government spends money, it creates growth. Mr. Wright, I'm going to let you speak very soon. Guys, I just shared a tweet, right? If you look at the tweet on this timeline, you will see where I have shared, right? The growth, if you invested, for instance, and this is the US market, right? I don't have really the Nigerian market, but the US market, if you had invested, say, the sum of $1 from 1926, so you invested a sum of $1 from 1926, right? And we go all the way to 2021. What will that dollar have returned for you using past returns? I'm trying to make the point about objective-based investing here for you, right? So if you had put in $1 in 1926 and you had bought shares, you had bought bonds, or you had just kept the cash, what would you have achieved? And it's the infographics on the timeline of the spaces. If you had done shares, you'd have got about $14,000 from 1926 all the way to 2021. So shares, because you are compounding, you are riding the growing economy of the nation, would have given you a higher return, about 14%, right? What about bonds? So bonds means you are lending money, you are giving someone money to invest and it's going to owe you. If you had invested in bonds in America, you would have gotten just $288 from 1926, $288. And if you had held your cash, you would have gotten only $21. This sort of return, where you see equities doing well over the long term, if you look at Nigeria, it gives you almost the same similar pattern. Over a long period, equities tend to outperform other asset classes because of this issue of the compounding of dividends and they are locking into the growth of the economy. Not all equities in all countries do this, but equities over time, all things being equal, are able to beat inflation in most economies. This is why we say longer term, they tend to tell you, hey, consider equities longer term, right? And I've just shared that infographic. So if you want to grab it, that's going to be a good talking point for you. Mr. Wright, how you doing? Dr. Kabir Ali, how you doing? Go ahead, sir.
Good evening, sir. I'm doing all right. Thank you very much. Now, my contribution is, although you say that we should not ask a lot of questions, but I'm sorry, I have to do this.
No,
The thing is,
I want you to ask questions. Sorry.
okay, because I heard you saying that we should not ask what to do or what to buy. All right,
Go ahead.
right. Okay, my question is, I've been trying to venture into exportation since 2 years ago. to and Mexico, but they were all kind of so engaged there, and they couldn't help me. And of course, I made my research here in Nigeria, and but I've not been able to make any decisive inroad over the years. So I'm wondering if someone has any kind of like contribution or information that will be very helpful
Mm,
in this kind of venture, please.
mm. Yeah. So if you want to go into export, that's another area I think is going to be perfect in 2023. Why? Because you
Okay.
can make foreign reserves. So if you make foreign currency earnings, that's going to be key for you in an economy where we are not sure of the direction of the dollar. So anyone earning dollars in 2023 is on the right path. So that's the first thing. So you're on the right path that you want to explore exportation. What I'll say,
Yes.
the first place you want to go, there's a commission in Nigeria called the Nigerian Export Promotion Council. Before you do,
Okay.
go there. They are also on Twitter, Nigerian Export Promotion Council. Go there and register as an exporter. You have to register first of all so that you're on the database, and they have a ton of resources. If you can search for me, say Kalu Aja Export Nairametrics. I wrote 3 articles on export where I put a lot of links. The way the NEPC has built their website, if you know what to export, let's say like you want to export, say, soybeans, right? You can find
Right.
out countries in the world you can export your soybeans to that are looking for soybeans. So you can say, oh, you can go to their site and you can say soybeans are needed in Vietnam or in China. It will tell you that, then you know, okay, if I want to export soybeans, I have to go to Vietnam or China. It would now give you a directory on that same website of who in China, right, which particular company or which particular person is a big soybeans purchaser. So you can then go there, get tested. It will show you where you can get your soybeans tested for export, right? Because you want to send a sample and all that. So it will also tell you if you don't know where to export to, you don't know what to export. You can also go to the site and find out what commodities or what products are needed in what particular country. So you can go to the UK and to tell you what UK wants to import. You can go to America or Canada, it will tell you the exact same thing. This country needs this or this country needs this. So there are many ways to do your research. You can either know you have the product and you want to export it, or you could find out from the country where you live in, or you have a contact in and say, hey, this country needs this, and I want to export and I want to get that. You can get that information there. It's a lot of research. I would say for exports, right? The research is 99% before you even do one thing. It's funding, it's understanding the market, it's understanding how you are paid. Are you doing CIF? Are you doing cash in transit and freight? Are you doing X? Are you just going to leave it at the port and then they pay? So you have to do a lot of reading, and that's what I try to do in those 3 articles. Just Google my name, exports, Nairametrics. They will come up. They've got tons of links, and I did it step by step. So I think the first thing you want to do is this, then the next things, right? And also on that article, they also tell you how you can do a template to know if that export you want to go into is going to be profitable, right? So if you want to export again, say cashew nuts, it will ask you how much is the farm gate price of cashew nuts. Where is the price that you're going to export it to? What about your cost of insurance, your cost of bank loans? You can actually do that calculation and see if it is something that you want to go into. I would not advise you doing any exports unless you have understudied someone or basically invested in someone that is doing exports so that you understand it first. Because you might have the best product and you might pack it wrong and it gets rejected. So I wouldn't borrow to do any exports, and I would not export on my own without either understanding the whole process or even going to invest in someone that can export. Then let him then guide me, and I can learn essentially from him. So one thing I'll say, go and do tons of research. If you don't have those articles, send me a DM. I'll send them to you. But please just look at my name and I make sure you get it. Look for someone you know is exporting and try to understudy him. Either you invest through him or
Okay. Thank you very much.
very, very good you do that. Don't invest without getting that background knowledge first.
Okay. Okay. Can you remind me the name of the article, please, so I can jot it
Just
down?
my name is Kalu Aja. Just say exports. I published it under Nairametrics. So if you just
Okay,
say
Nairametrics.
Yeah, if you just say Kalu Aja exports Nairametrics, there are 3 articles and they all have the link I'm talking to you about. It's going to give you step by step how you do your research, how you register, then how you basically do your funding, Everything is there. Lots of pictures, lots of links. So it's like if you get those articles, perfect. You can do your background study before you then go out and say, okay, I need to go raise money and all that. Yeah. Also on this, we've brought an exporter here in the past. We've talked to him. If you can also search on the Spaces library where we talked about export, yes, you can also see some very, very good. There's a guy we bring in here, Mr. Emmanuel. He's an exporter. Also, yeah, it's so good to listen to Spaces. Yeah, that would help. But
Thank you very
good.
much, sir.
You want to do exports? I like it. Yeah, go get it. Yeah.
Thank you very much, yes, sir.
Thank you, Mr. Ryan. All right, K-Some. Hey, K-Some Stan, what's going on, man? How you doing?
Good evening. Good evening. How is
How
everyone?
are you?
How's everyone?
Everyone looks good. Everyone's doing good. How are you doing?
I'm fine. I'm fine.
What's on your mind?
Being a follower of you. Sorry, a call came in now, but I dismissed it. I've been I've been a follower of you for a while, so I just have a few questions, and a lot of them might seem okay. The ones I'll ask today will seem very naive, but please just answer them for me.
No question is naive. No question is naive. Go ahead.
Okay, so I listened to you talk earlier on looking at the presidential candidates and what they look to achieve going into 2023. So, and a lot of my chips on P2B, I'll be honest. So now, and I'm sure that when he goes in, I've told my friends that um, IT in Nigeria is going to boom because he's looking at he's going to create the enabling environment. Let's say even the running costs for a lot of things will drop when electricity, like let's say, balances up to a little bit. Businesses can run better. So now there's I have an idea, but now I need to understand. I called my friend. I don't. She wasn't giving me a straight answer. When for exchanges, there was something he talked about creating a one FX system in Nigeria, like the total elimination of black markets. So, if I'm correct, that what Nigeria is operating two systems of foreign exchange. That is black market and CBN. I don't know. I did study economics. So if we are to run one system, how are the remittances going to happen? Like if someone sends you money from, let's say your uncle sends you money from the US and it comes into Nigeria, for you to get the money, will it be converted to dollars? Does it will something like that kill domiciliary accounts in Nigeria, like end them totally, or will it still be a thing? And do people living in UK, do they have domiciliary accounts? Like someone from the US is receiving money from to the UK. Do they have domiciliary accounts for all those things? I want to just know.
Okay, so great. I understand your question. I mean, you are asking a lot of questions in one. I get it.
I know.
Let me see. I got you. Good question. Let me see if I can simplify everything for you. Right.
Yeah.
So every country has a currency. Every country has a currency. You have naira. I have dollars. So let's first understand what the dollar is. The dollar is what you use to trade. If I am in Nigeria and I want to export cocoa to Japan, right?
Yeah.
That means that the Japanese guy wants to buy cocoa from Nigeria. He needs naira. I want to buy Honda car from Japan. I need yen.
Yeah.
The way international trade works is that I don't use yen. He does not use naira. What we both use is the US dollar. So we would use the US dollar. I would use the US dollar and trade with the Japanese guy. So the first thing to understand is that the US dollar is how we settle trades between two nations and two parties. We use the US dollar to settle. What that means is this: if I want to buy crude oil, I need dollars. I don't need naira. I need US dollars. Hence, the way you get US dollars is number one, you do exports. If you export, you get crude oil. You get dollars, sorry. Number two, you can do investments. So folks can come and buy your bonds. So you can do a naira bond in your local currency, and folks can bring dollars into your country and buy those bonds. Then you get dollars. And number three, for a country like Nigeria, you can do remittances, which means that the Nigerians living abroad can remit dollars back to Nigeria. So let's say for Nigeria, we have those three sources. We export crude oil, then we have investment. People buy Nigerian bonds with Naira, but they give us dollars, right? Like foreign portfolio investments. And the last one is remittances. Remittances in Nigeria is a very, very big thing. We get about $25 billion officially via remittances. It's almost the same as we get from crude oil. So it's a very, very big thing, right? So what is going on is that when those dollars come to Nigeria, they are supposed to go to the central bank. So the central bank in Nigeria is the one that receives the dollars. Then if you want to import, the central bank will pay your imports. So understand what's going on. If you have your own dollars and you put your own dollars in your domiciliary account and you want to pay for X imports, it is the central bank that would pay your exporter, not you. It's your money, but the central bank pays. So the central bank wants people to put money in their vaults. The problem in Nigeria is this: the central bank wants to buy your dollars, right, at 466. But if you go outside the central bank, you can sell it at 750. So there's a big gap between the official rate, which is about, say, 500, and the unofficial rate, which is about, say, 700. So because of that, nobody is sending money to the Central Bank of Nigeria. So the Central Bank of Nigeria has no dollars. Just you see them owing airlines because they can't pay the airlines, they have no dollars. So you then have those two rates where you can go to the central bank and get a cheaper rate, which is subsidized, or you go to the black market and you get a rate that is not subsidized, but you get it. So central bank, you delay, but it's cheaper, but black market, you can get it, but it's expensive. So how do you fix this? The way you fix it is to always follow the market. The market is always correct. So what the market is telling Nigerians is that the real exchange for the naira is the 700, not the 500, i.e. that the black market rate is the real price of the naira. That's what the market is saying. The central bank can say, no, I disagree. The real price is not the 7, it is the 5. If it says that, then it has to supply the market with dollars at 500. But to supply the dollars, it has to take from its foreign reserves and do that, which it's not going to do, because if it spends all its foreign reserves, it can no longer have dollars to import. So when you see the candidates saying they want to eliminate the multiple rates, what they are saying in other terms to you is that they are going to devalue. Devalue means that that central bank figure of 500, they will take it nearer to the black market rate of 700. So that if it is nearer to that, then more dollars will come from those importers and the remittance people back to the central bank and not to the black market. Right now, the central bank is competing with the black market for dollars. That's why they don't have dollars. They are competing, they are fighting for dollars. So if I have $100, if I give it to the black market, I get more. If I give the central banks, I get less. So central bank is saying, oh, we'll give you incentives, we'll pay you. That's what they are doing, right? So the central bank can raise how much they will buy the dollar from me, from this 466 to say 600. That's what's called a devaluation. If they do that, they get more dollars. But of course, you know what devaluation means. It means that officially your currency has lost value. So you might get other bad effects with that, right? That's what's going on. So when they say they want to make it one currency, DOM account is not affected. But DOM account will then be able to sell to the bank, because the DOM account holder will say, oh, I've made a profit at 600, I can sell. Other countries don't have a DOM account because other countries don't fix their currency. The US government does not fix the exchange rate of the dollar to the euros. They don't fix it. Because they don't fix it, they don't need a reserve to maintain that peg. If you want to buy dollars today, just go online, you go to the currency market, and you can just buy your dollars. You don't have to go to the Central Bank of America, the Fed, to buy dollars. So, Kesom, have I helped you out a bit?
Yeah, yes. You've helped me out You've helped me out very well.
Hello.
You've
Okay.
helped me out very well.
So when they make the dollar rate equal, what will happen is this: that the naira will go up to fall to 600, right? But it will stop imports to make imports expensive. So it will reduce the imports. then to make local products more attractive. So I went to a store in Abuja, they were selling sparkling water from France. Nigeria shouldn't be importing sparkling water from France. It's a waste of foreign currency. So if you make imports expensive, you don't see sparkling water from France, you might see sparkling water from Ogun State, so you conserve your currency. That's the whole idea. It's a bit more technical, but if you say you're okay, that's fine. I'll let you go, and I'm going to take Juliet that called. Hey, Juliet, how you doing?
Fine. Good afternoon, good morning, good evening, everyone. Um,
Hi.
yes, thank you for the opportunity. I think I want to weigh in on what you said and in answering, I can't pronounce his name, Yeson's question.
So it's Kaisum.
Kaisum.
Okay.
Okay. So talking about the remittancy part. So just yesterday night, or for a while, I've been thinking about how to send money to Nigeria, and of course to get the best medium possible, so I don't have to pay a lot of charge and all of those things. And just by talking to a lot of people, and then somebody say, "Oh, why don't you download this app, Remitly?" I'm not advertising the app, so I just downloaded the app, and then I tried it. So I was going to send pounds, but it says, okay, if you're going to send to Nigeria, it's going to be converted to the dollar. And the good thing about the app now is you just have to put the NUBAN of the person's domiciliary account you want to send to in Nigeria. So it goes directly. And then I told another friend of mine, and then, oh, I want to send money to my own account, but he didn't have an account. And immediately on the app, he transferred from, I think it was a Revolut or something, I don't know what it was. It GT automatically created a DOM account for this person. So the money, the dollar or whatever he sent, is in GT Bank with a new domiciliary account for him. I don't know
So,
how that works.
Juliet, you're saying that if I'm in the US,
Yeah.
I can send US to Nigeria and they give the person the dollar.
Yes. Like I have the app right now. I did it yesterday night. So I'm just waiting for my sister to send me her Nuban. So I was like, okay, go and ask GT Bank what your Nuban is and then give me and then I will continue. But yes, it's possible. It lists out all the Nigerian banks there on this Remitly.
Yeah. What's the name of the app?
Remitly.
Remity. I know there's a
Remitly.
REMITLY. Okay, I mean, all do your due diligence. Check it out, guys, if you like it. I also know there's an app I do use, Kayoshi. Kayoshi also gives you they give you the rate. I think this is the rate you get is the same rate as you would get because you barter. You find someone that needs the dollars in Nigeria, right? So then you say, hey, I want dollars at this, then I can send to you. Just like how I do with my friend.
Yeah.
So they also do that. But I think the key point, just like you said, is
Is
find out
yeah.
your best. Yeah, do your research the best way you can get dollars. It's really a question of look at if I'm a Nigerian and I live in America, right? And I have $100,000. If I go to my bank, they're not going to give me 1% return. I will not get 1% return. But if I put that money in Nigeria, all these banks have got this Euro bond money market fund that they do. I think FCMB has one. We talked about with FCMB a lot here. They have this FCMB money market where you are investing in dollars in Nigeria to buy a Euro bond. Those boys are paying 4-5%, 4-5% in dollars. So if I was able to,
Do you mean 4-5% annually?
yes, 4-5% annually in dollars, money market fund. They are investing in the Eurobond. The Eurobond's yield on the market is about 8%, that 30-year Eurobond that Nigeria issued. So what they are doing is that they buy that Eurobond because the Eurobond, you need $200,000 to buy it. So not everyone has got $200,000. So they buy that Eurobond, then they chop it into bits. Then they are selling you a bit of that Eurobond. So when you buy that, if you take away their fees, you get about 4-5%. There are many of them in Nigeria, many money market Eurobond funds that have this stuff. So if I bring my money from the US to Nigeria, I get about 4-5% in dollars. But I now have the Nigerian country risk. So my money is in Nigeria. So I now bear that Nigerian country risk. But it's just that these are the options out there, really. If you like, again, it's going to be based on your objectives. If your objective is to grow your principal and you can absorb that risk, fine, it's something that you want to take a peek at. Not recommending, just giving you guys options out there.
Okay, please, Juliet, I would like to get an opinion or an insight from you. if the money you send to someone in Nigeria, and I understood that it's, you said GT kind of created a dumb account automatically.
Yeah.
Now, would you be more comfortable if you sent pounds and the person receives naira automatically? Like
Okay.
um let's say you send 1,000 pounds, and let's say the exchange rate is 500 naira to £1, and you send 1,000 pounds. That's supposed to be like 500,000 naira,
Okay.
and the person receives 490k. Is it something that you could live with if you are to send the money to a relative in Nigeria?
I don't
So,
understand the question.
Okay,
Kaisom, I think I
let me
understand you. Can I?
let me repeat the question again. I just want the thing is, I'm looking this what I'm looking at, and I've been looking for how to get some people's opinions on it. What I meant is, let's say your sibling or your relative is living in the suburbs of Nigeria, let's
Okay.
say Akwa Ibom State. So, and you want to send money to this person,
Okay.
when you send and the DOM account is created,
Mm-hmm.
the person still goes to the bank, withdraws the dollar, then goes to the black market to convert it for a higher for something
Mm-hmm.
higher. Will you be more comfortable banking with an app that, or exchanging with an app that if you send the person the
They
pounds,
get the
she
pounds.
receives, yeah, they get the naira
Let me,
equivalent
I
without
think,
even seeing the
I didn't
pounds.
explain further. Now, I mentioned two opinions. The one I tried was the Remitly one. So this one asked me for the person in Nigerian's Nuban number. So I didn't complete the transaction. So I asked my sister to go to GT because she has a DOM account to get her Nuban. Then I would complete it. But what that app was telling me was going to happen, because I was going to send pounds and she was going to receive dollar, right? And she will be able to take the dollar and then go to the black market and change it. I was more than happy with that. But when I told a friend of mine, now I don't know how he tried to do his, but he was concerned about sending the money to his own account, right? So I don't know whether I don't know, maybe it was Revolut or what app he said he used. I'll have to find out. But whatever, it automatically created an account in GT, a DOM account in GT, and transferred the 50. He was going to do $50 to his new domiciliary account waiting for him in GT. But he doesn't have access to that account because he's not in account in in Nigeria. But he also said that if GT was going to change that money, they were going to change it at bank rates. So he didn't opt for that option. So he just said, okay, create the DOM account and directly leave that money there. So if I have access to take that money when I'm in Nigeria, I will do black market myself. I don't want your bank rate.
Okay,
Okay,
Uh,
I understand.
please, sir, can I say something? I
go
don't know
ahead.
the protocol.
Yeah, you
Okay, thank you.
go ahead and speak.
My name is Kahamara Afam. I I live in the United States,
Okay.
and for several years I've been sending money to Nigeria. You know, the regular way you send money to your family and siblings in Nigeria. Um, before last year, before the COVID, the way I do is I either look for Nigerians who are in the US who kind of are middlemen slash currency exchangers. You give them money here in the US and they pay in naira for you in your accounts. Now those guys were that their exchange rate was less than the black market exchange rate in Nigeria. So at that time, if money was 400, they may change for you at 350. That's if the black market was changing at 400, then they will change for you at 350, or they will change for you at even a lesser amount, or lesser rate. However, after the COVID, certain apps started to spring up, just like Juliet explained. There was this world remit, not remit, but world remit. and there was this send wave. I don't know if anyone has heard of that send wave. The word remits a couple of times. It wasn't so. Well, I don't want to say negative of any app right now, but I think from my experience, I had more like straight transaction
Yeah,
via
Kahama,
Sendwave.
I don't want us to talk about particular brands or
Okay,
apps.
good, good,
So
good,
if
good.
you really have a
So
question on that, or that's yeah, we would love to hear you out. But
okay,
what I'll say is this, right? Like you said, there are lots of apps out there. Do your due diligence. The ones that will give you forex are very, very rare because CBN at the time passed a circular saying that they have to give you dollars. What CBN are trying to do was to kill those guys by saying import your own dollars from the US to Nigeria, then pay it out, which of course is going to be impossible. No one is going because it's not cost effective for them. The dollars in Nigeria, really, where do you think it comes from? The physical dollars you're holding in your hand, how do you think it came from the US to Nigeria? Someone had to put it on the plane and fly it here, i.e., that currency you have in your DOM account. It was brought on the plane and flown to Nigeria, and that's why it's here. So if that dollars we're trading, we're looking for the best price, but the physical dollars you want to hold in your hand is where the problem is. So, I mean, I don't think people care. Nigerians don't spend dollars. What Nigerians want is the right exchange rate. If you are going to give me the exact black market rate, Nigerians don't care really about, I mean the guys that do the import or the other spend. If I send money to my mom in the village, I want to give her the best Naira rate, not the dollar. She can't spend dollars in the village. Right, Ghana?
yeah, you're right. So my question is this: the aim of this forum, do you have an app or whatever you kind of advertising on
No,
me
not really.
sending my dollar and give it to me
No.
at the exact black exchange rate?
Listen. I'm very careful to nominate or to promote apps, but I personally use Flutterwave. Right, Flutterwave. I use Kyoshi. Flutterwave. Just Google Flutterwave Bata. Flutterwave Bata. You might try it out and see if it works for you. Kyoshi. Kaos. Kyoshi. Google them and see if it works for you. Right? They are like Juliet has mentioned, you have to try it out, look at their board, look at who runs them, look at their review, if it works for you. But I really don't want to talk about or say, hey, I recommend this particular app for you, right? That's how I'll say it. Yeah.
Okay,
Yeah.
but I'm just asking. I basically joined this program, and you guys are talking about apps and sending money to Nigeria, and I got interested, right? I want to know what's the aim of our discussion today.
We discuss every Saturday. We've been doing it for almost 2 years now. Every Saturday, we talk about money, investing, personal finance. So this is just a topic we're doing today.
Oh,
And
got you,
today
got you.
about we're reviewing 2022 investments. We're really saying if you have a question on investing, how to go about in 2023 or review your past years, let's go ahead and ask. I will try to give, so we say, my own opinion, my educational opinion, more or less. Yeah. So with this is we're doing this. We do this is every time. We do this every Saturday and also on
Oh,
Mondays.
got you,
Yeah.
got you.
Mm.
Okay, that sounds good.
Excellent.
Thank you.
I appreciate you. Okay, I've got Oluke, and someone wants me to talk about arbitrage, but I've got Oluke. So, I mean, arbitrage is just when you have a price of an asset. The price of the asset is sold at a different price in different locations. For instance, dollar in Ghana and dollar in Nigeria is the same US dollar in Ghana, the same US dollars in Nigeria. But if I use Naira, let me use a better example. If you want to fly to Europe from Ghana or fly to Europe from Nigeria, it is cheaper to buy your Ghana fly to Europe than buying your ticket in Nigeria to fly to Europe. The reason is different. Let's just focus on this. So arbitrage means that if I can go to Ghana, I can buy a ticket and sell that ticket to Nigeria. So I'm arbitraging the price. I'm looking at the difference between the price of the same asset, but in different locations and trying to make a profit off it. Same way if I buy gold in the US and I buy gold in Japan, if the difference in price exists, I could buy in Japan, sell in China or sell in the US to take advantage of the differential in price, either caused by lack of information or just market irrationality. So when you are doing arbitrage, you are trying to take advantage of the mispricing of the same asset class, either in the market or in a different market. That's what you're trying to do. It can be arbitrage in anything, but you are saying this same product is sold at a higher price here, so I'm going to buy it where it has a higher price and sell where it has a lower price. All right, let's get Olu K. Olu, how you doing? Magic 7, Magic A7. Go ahead, sir.
Hi, Carlo.
What's up?
How are you today? Thanks for the opportunity. I was going to chip in on when the guys were talking about money transfers.
Yeah.
So I live in the United Kingdom,
Mm-hmm.
and I'm just going to talk about my own experience sending money down to Nigeria. Before, traditionally, almost everyone I know has a contact of someone who does this money transfers. They're sort of they're passed around. They get referred by someone, and you just end up doing business with them, transferring money to their accounts, and they credit you in naira. So for every £100, they charge you £5 to send it, and that's been the way for about probably around 20 years now. We've always been sending. Then came the rise of all this letting you. They also go very close to the market rate, the black market rates, and they don't usually charge any fees. There were so many of them: Small World, World Remits, quite a few of them. You had multiple to choose from. So I think the attraction to them then was the fact that they were not charging any fees. So then the fact that they credit you within minutes. With the old ways, the guys that you transfer to, you have to wait on them. Usually takes a couple of hours. Sometimes it's equally fast depending on who you're dealing with. But then came the CBN Act that stopped the payment out in naira, and that sort of just killed their business. I think there's still about two of them that still do payouts in dollars. They ask for your domiciliary account and they pay you out. I can't remember who exactly, but I think Small World Money Transfer, they ask you for your domiciliary account and they still do credit in dollars. And I believe there's another one. They do pick up. You can pick up. They have locations everywhere in Nigeria where you can pick up the currency if you want to. But essentially, the CBN Act killed a lot of these apps. But lately there is one that is now currently making wave again in the UK. It's called Lemonade Finance. Is also an app. You credit them and they pay you out in naira in minutes. I don't know how they're getting by the CBN Act not to pay in naira, but Lemonade Finance is currently paying out in naira. And for everyone using it, once you're signed up and using it, if you refer and someone signs up and sends money, a certain amount, can't remember now, they pay you £10 referral fee as well. And I've had quite a few £10 they paid. But the interesting thing for me that happened recently was with them, I had more naira and I needed pounds. And I just thought, I should check if they do actually do the reverse the other way. And they actually do. They asked me to credit, and I didn't have to speak to anyone. I just selected naira to pounds, and the OPay was sort of in my name. And I was at,
What's the name? What's the name of the app?
Lemonade Finance.
Oh, yeah. Lemonade. Gotcha. Okay.
So they just I credited the OPay Finance, the OPay account. I don't know how that was opened in my name. I don't have any idea. And probably about 30 minutes after, they credited my UK account with pounds. So, and so far so good. For I don't know anything about the company. I don't know who owns it, but so far so good. Hundreds of people that I know have been using it effectively. So that's just my take on that.
We're going to add that to our list of apps to check out and see if we can use it. I think it's 2023, for everyone's going to spend a lot of money. The government is going to spend a lot of money. We need dollars to flow in. So anyway, we can get investment dollars or personal dollars to come into the country. Wonderful. Remittances are all welfare. We need to get investment dollars to flow into Nigeria. That's when we then get that big boost. Hey, Promise, what's up? Go ahead. Promise, you've got the floor. Go ahead, sir.
Good evening, everyone.
Hi.
Good evening. I mean, since a whole lot of people are out of the country, I'm literally in Nigeria.
Yeah, so, Promise. Your audio is very low. Is this? Can you speak up, or how does it work? Promise, go ahead. Okay, Promise. All right. All right, let's get Ola. Slim Tenny.
Can you hear me now?
Go ahead, sir. I can hear you, Promise. Go ahead. Yeah, lot better now. Go ahead.
I'm just joining this space. This is my first time. Thank you, Mr. Kalu. I saw let's review our 2022 investment and portfolio and look into 2023. I have not been big on investment for a while now, but because I've really studied investment. Sorry, I'm going off about the whole UK apps and everything. It's just about investment I want to talk about now. I hope I'm allowed to do so.
Yes, you are. Please go ahead. Yeah, love it.
Because of the whole crisis we're having in the economy and everything, I've sat down to take a look at how I can make investments, which is actually a difficult thing. Sometimes you earn like once in a month and you spend every day of the month. So it's really crazy, and I literally wanted to get more insight on how I can try to invest and still have a little to spend before the next, maybe for people that are living on salary. You understand what I mean? So that's just
okay. So let's use you as a case study. Let's use you as a case study, right? Don't tell me your particular age, but are you below 20, below 30, below 40, below 50?
I'm below 20. I'm sorry, I'm below 20. I'm below 30. Sorry.
Below 30. Are you married?
I'm not married. I just got
okay. Do you have dependents?
University.
Oh, gotcha. Do you have a job?
Actually, not really, but I do a bit. It's just like part-time job.
Got you. I mean, the best advice I will give you is to get a job. When I mean a job, get income, steady income. That's the best advice I'm going to give you right now. So if you had a job, for instance, right, and you were that age you told me about, right, I would say that your objective right now, like I said at the very, very top, is accumulation. You have the same amount of time, 24 hours, with everybody else, but you need to start to accumulate assets. What an income does for you is an income allows you, and I'm going to be very careful here, to use leverage. An income allows you to borrow. When I mean borrow, I mean you can use that borrowing and invest in assets today that the price of those assets go up tomorrow. So let's say you had a job and you are 25 years old, you just started to work, right? The very, very first thing I would say you want to do, the very, very first investment you want to do is to try to build an emergency fund. So you want to take 3 to 6 months of your expenses, the ones that you must make, whatever happens to you. Even if you lose your job, you must make these expenses. You want to open an account, call it emergency fund, and you are saving just cash or near cash in that fund. So what are your necessary expenses? Your rent, your feeding, maybe the gas for your car, the things that you must do, even if you don't have any income for the next 3 months. So you want to say, what do I spend in 1 month? on rent, divide it by 12, save at least 3 months of that. You don't have to save it immediately, but have the fund and start to build up that 3 month saving. It has to be 3 to 6 months. The idea is that this is your insurance, your cash flow insurance. If anything happens to you, you fall back on that emergency fund. When you do your emergency fund, the next thing you want to do is, if you are married or you have dependents, you want to buy life insurance. Now, life insurance does not protect your life, it protects your loss of income. So what you're saying is that if you have a dependent, if you are married to someone or you have kids, what you are protecting is that if you go away, there's income that they would have gotten if you were there that goes to them. So you can insure, you can pick a life policy of, say, 5 times your annual basic. The Nigerian pension industry gives you 3 times. You can pick 5, you can pick 10, and then you can say, hey, this insurance, you can give it to a trust and say, if something happens to me, this money should go to the education of my kids or should go to pay off my mortgage. You can link that insurance payment to something or just to pay your dependents, right? So you do, number one, your emergency fund. Number two, you do your life insurance policy. It's only after you have done that number one and done that number two can you start to invest. That's only when I would say you can invest. Where do you start investing from? The first place you want to invest is in your company retirement plan. So in Nigeria, if you have a retirement savings account, you do that one first. If you're in America, you have a 401k, you do that one first. You don't invest outside. You first of all invest through the government's pension plan. Why? Because it has tax advantages. When you put money in a government, should we say, in retirement plan, you are deferring taxes. So any money you put in there, it's not, that income is not taxed. So you are deferring taxes and you are allowing that money to grow, right? That's what you want to do. So you first of all do the 401k if you're in America. If you're in America, there's what they call an IRA. The IRA is so good that the American government will restrict how much you can put in it. So if in America you want to Google what's called the Roth IRA, ROTH, the Roth IRA, you do those first before you invest out. So number one, your emergency fund. Number two, your life insurance. Number three, your retirement. You start to save for your retirement today. Why? Because it's got tax advantages, number one. And number two, it allows you to compound earlier. When you do this three, then you can start to buy, whether you want to buy shares, you want to buy bonds, according to your risk profile and your objective. If you're a younger person, you don't know anything about the market, you want to look at ETFs, exchange traded funds, because they are cheaper, they give you diversification. You can buy one ETF and that gives you exposure to all the stocks in the world, or all the stocks in America, or all the stocks in Nigeria. So you can easily build a portfolio by simply saying, I'm just going to buy this ETF. I get exposure to the world, to America, to Japan, to Nigeria. You can build a portfolio like that before you decide to do your individuals. One, if you can do these four things I've talked about, you are nearly there. Remember, investing is a habit. So you don't want to do it today and stop. You want to keep on investing. You want to keep on keeping that 6 months emergency fund. You want to have your life insurance updated. You want to watch your expenses and your spending. And then you want to keep on investing. You want to grow your net worth as you are younger, so that when you get older, the net worth then starts to pay back. When you get older, your income, all things being equal, would increase, but you have less time for something. Promise, that's my pathway for you, right? That's what you want to
Yeah,
do.
yeah, yeah.
Uh, Yeah? Does that work for you?
Yeah, it works. I really appreciate this. Is like I've never heard it before. I used to say that I will go into studying finance so I will understand, because it's really crazy. The future is like getting crazy. So I want to like build up before it
Yeah.
gets crazy. So I wouldn't have to regret that I should have done this in the past and stuff like that. But with all these you've said, this is literally amazing. Like I don't know. I'm just writing things down. Like thank you very much. I really appreciate it.
Yeah, you can try to. I have a book. If you can buy the book, it helps you. I also written a lot of articles that are in the book and they're out there for free. So the book just puts everything in one. The book's on my TL, or just look at my articles and do it step by step. You have to follow that. You can't invest if you don't have a life insurance policy or an emergency fund. Why? If you lose the money in your investment, you're going to hit you won't have don't have money to feed. But if you have an emergency fund and you lose your job, at least you've got 3 months to get yourself together. So your number one target, like I said, is to go get a job. If you get a job, follow exactly what I've said. This is going to be recorded so you can all go back and listen to this, right? Get a job and then follow the path we're giving you, right?
Thank you very much. Thank you very much. I really
You're welcome, promise. Have a good
thank
one.
you.
Yep, nice one. I've got Ola Slim Tenny. What's up, sir? You've got the floor. Ola
Thank
Slim. Hey,
yeah. I'm here. Good evening, everyone. Good evening, Kalu. Thank you so much,
hey.
sir. Please, can you hear me?
Yes, I can.
Oh, okay, great. Um, yeah. The last speaker actually asked my question, and I had to quickly start making jottings because he already asked one of the questions I was actually going to, talk about. And thank you so much. That was so insightful. I never thought about, the place of saving, getting life insurance, the importance, particularly when you have a dependent. So, I got the idea about getting a job, saving for emergency funds. That, like you said, having savings that can last for 6 months without income. I think that's correct. I just want to be sure of the things I wrote down.
Yeah, that's what you 3 to 6 months. The technical term is your non-discretionary expenses, the expenses you must make, irrespective. Your rent, your food, your gas. 3 to 6 months, say build that up before you start to invest.
Oh, great. Thank you so much, sir. My other question is about because I've actually tried out some investments this year, and
Mm.
I got burned. Like I got burned 2 weeks
You
ago.
bought
I said I tried out some investments and I got burned. I actually lost um the capital.
gotcha.
Yeah, so 2 weeks ago I lost 400K, and trust me, it got me depressed. Like, because I've never tried out such a huge investment before, and I'm just trying to see it as one of the challenges. And really, I don't want to give up on investments and those major stuff. So that's
Can,
what
can I ask you what you invested in and how old you are? If you don't mind, you can give me just the
oh,
range.
oh, okay, that's great. So I'm within the range of 25 to 30.
Okay. What did you
Yeah, great. So I invested in forex.
Forex?
with
Okay.
Now, not with a stranger, with a trusted friend, like a childhood friend, somebody close
I
to me
hear
who has
you. I hear.
success other people. So
I hear.
um so I actually did that investment because I I got an admission, MBA admission into Duke University in the United States with a scholarship, but I had to pay the
Hmm.
acceptance fee, which is very high.
Wow.
There's no way I can get it from, and I decided to, so he convinced me to try it out, take part of my savings and, invest in it. Correct. Let's see what will happen. I had deadlines for paying the acceptance fee coming up, so I had to make that decision in a rush. So I
Oh
spent the
my God.
money.
So
Yeah.
Ola, just hang in there, right? So I wish that you had given me a call or I'd met you maybe before you made the investment. Let me just say a few things about forex, quote unquote, investing. You don't
Okay.
invest in forex. There's no investment called forex. Forex is like saying you invested in naira, right? What they tell you forex is that they tell you don't want to trade. When you are trading forex, what you are trying to do is to foresee the economy of the world. You are saying that the US economy will go up or come down, or that there'll be a recession or there'll be no recession. You might not have the means or the research ability to understand what's going on. So investment to me in currency, that's not an investment. They promise you a fixed return. That's wrong. You can never ever make consistent funds in forex. Never. Anyone telling you that is lying to you. And since you had a set objective, you had to pay a fee. Your 400,000 should not have been invested at all. That should have been your seed, and you say, hey, how can I add to this? You can't invest your seed. Like you can't take your maize seed, right? And then cook rice with it. You plant your maize seed, you get more seeds, then you eat some rice, then you sell the excess seeds. You never ever take your seed and you throw it into an investment. So currency was wrong. Whoever gave you that idea, you should never have done that with the what you have. I would have said you try to have a target, maybe 2 to 3 years, and see if you can save, or even try to get over there and then get a job there. But please do not look at currency trading as an investment. It's trading. You can do 1% if you want to, you can do 2% if you want to, but never ever take currency trading and say, this is how I'm going to invest and grow my revenues, or this is how I'm going to retire. You can never make money with that. All the banks lose money on currency trading. It's trading, it's arbitrage, it's high risk. And you need a lot of money to make money. The difference between dollar and yen is not up to maybe 10 pips. So all that you can make profit is just they're just trying to get you to trade. What naira to dollar, yes, is 300 naira differential. The difference between dollar, yen, euros is not up to how many pips. So how do you make the profit? You need billions to trade in currency. So I'm so sorry you lost that money. Is she still there? So,
Yes, yes, I'm there.
so what do you want to do now? So you've lost your 400,000. How is the school coming along? You don't have the school anymore. What do you want?
Yeah, I got the scholarship as well, and
You got a scholarship, right? Do you have a
yeah,
job?
and HTK scholarship. Yeah,
You have a job.
yes, yes.
Okay. So are you married?
No, I'm not married.
So what's your plan? You want to leave Nigeria or you want to stay in Nigeria? What are you looking at?
Yeah, the plan is actually to, leave Nigeria.
Mm.
That's the plan, but now it's on hold, and I'm looking
You,
at getting a better paying job now.
excellent. I was going to say that your first goal is to get a better paying job. Your second goal is to get a skill. If you can learn a
Okay.
skill in Nigeria, then it's possible that you can actually make more revenues in Nigeria. Then that gives you should we say, the allowance to plan better. If you don't have a good job, you're always going to be in debt. And if you don't have a skill, you really can't sell yourself. So I will also say, as part of a financial plan, try in 2023 to see if you can upskill. IT has tons of upskill, medical. So try to upskill so you can at least increase your income, right? That's maybe going to be a
Yeah, I'm learning web development now. I'm learning
got you.
JavaScript.
And I would have done that and not invested in the currency if you had told me about it. But yeah, but we learn every day, right?
Yeah, thank you.
Thank you so much for calling. I appreciate it. I wish you the very, very best. Yeah, go get it, right? All right,
Yeah.
Tijani, sorry, you've been dropping in and out. Let me just get you before you drop off. Tijani, go ahead. Tijani, you've got the floor. How you doing?
Yeah, I'm doing good. I'm good. So with
Great. Okay.
regard to the pathway that you outlined for one of the speakers, the questioners earlier, so it triggered the question in my
Yeah.
mind. I've for like more than a year or thereabouts now, I've been into investing a little bit, majorly in the stock
Mhm.
markets. And
Yeah.
so I think probably because I've not really had time to sort of like go in depth into it, but I was hoping you would have something for me to say there. If you mentioned life insurance in terms of that if your funds are majorly domiciled here, you can do that maybe with your bank accounts or with your salary. About if for currently like about 90 to 95% of my investment, that's the kind of shares I've been buying are American companies. So I was wondering
Mm.
what are the mechanisms that one can use to sort of like ensure that, thinking of your dependents and family in the event of, let's say, death or something like that. How can you
Okay.
ensure transfer of ownership in case of death?
Okay, great question, Tijan. And again, let me just make the point. Those steps are for everybody. It's not has nothing to do with your age. Those steps are for everybody. Before you invest, the very, very first thing you do is number one, you want to build your emergency fund. Your emergency fund is 3 to 6 months of your what we call non-discretionary or what you might call necessary expenses. That's the first thing you want to do. Build your emergency fund, number one. Number two, you ask yourself, do you have dependent? Dependent means if you go away, will your loss of income affect anybody? If the answer is yes, then you want to buy life insurance. You can't insure your life, you are insuring the loss of income. Number three, you want to do your retirement, right? You want to do the company retirement first. If you're in Nigeria, RSA. If you're in America, Roth IRA. Then your 401k. Do your Roth IRA, do your 401k. You do those three first before you invest. So 1, 2, 3 before you invest the kobo. Let's go back to your specific question. Yeah, I hear you say you are buying ETFs, you are buying American themed ETFs. How can you do your insurance? If you have the means, go speak to a lawyer. They have lots of trust companies in Nigeria. It is possible to link your insurance payout because it doesn't go to your will. Link your insurance payout to your trust. Create a trust and say the money for this life insurance company will be paid to this trust. Appoint a corporate trustee. Then tell the trustee what you want done. The money will go to my kid. It will pay for his education, to pay for this one's education. Any balance after they go to school can go to the mom or can go to the church or the mosque, whatever charity you want. The trust allows you to lock up your assets. It doesn't go to probate. No one will be fighting over it. They can't fight. They can't go to a trust company and fight over your assets. It's locked in there. That's why it's a lot better for you. They may charge you, but what you're paying for is that certainty of that your assets will not be dissipated. So go speak to a lawyer or a trust company and see what you can do, right? That's what you want to do. Exactly.
Yeah, fantastic. Thank you so much.
And I appreciate you saying that. All right, thank you so much. Let's get live ashore. I've got Aginas. Aginas? Did I get that right?
Hi, that's life issues. Hi, Carlo.
Life is great. What's up? All
Oh,
right, go ahead.
hi. Okay, I just wanted to add my own 50 cent to this. I live in the UK, and what I have been investing in, apart from the pension that you said, and the
Yeah.
life insurance that you talked about, because that is a paramount. And like
Mm-hmm.
you said, you're ensuring the fact that if anything happens to me, my
Mm-hmm.
family, they are sure of my burial, and
Mm-hmm.
any debt I owe or my house is taken care of. I don't want my son being worried about that when I die.
Super.
I mean, I lost my dad 2 years ago, and I know what happens trying to bury. And I don't want my children to
Yeah.
pass through that. I want them to have that safe money of £50,000. If anything happens to me, they have that money. And I think everybody should do that. For pension, I
Excellent.
mean, if you work as a teacher or a nurse in the UK, you have a pension. And what happens is that most people, they will opt out of the pension because they want to get the money. But for me
Mm,
personally, I think it's just a matter of you are killing yourself. Yeah, they take like
mm,
maybe 10% of your salary. But when
mm,
you look at it at the end of the day, if anything happens to me while I'm in active service, my
mm,
family is assured of £150,000. Like if anything happens to me now, that money is there for my family. And that is a lot of money. And I have a lot
mm,
of my friends during the COVID, when they died, their family got that money. And because it's
mm,
a trusted government fund, and
mm,
there's not that money has been there over the years, and they will pay you out the money. And
mm,
for those who are nurses, who are Nigerians, I wonder why somebody, because of 300, 500 and payment, you opt out. Because when you pay the 300, your company pays close to 700. They add to the
mm,
fund. That's how pension works.
mm.
Another thing I have found out that I'm investing now on is on coins, mint coins. Yeah, there are the mint house, which is the government, the UK mint, like the currency. We would put and mint the currency. They sometimes they bring out these rare coins that maybe
Mm,
they only have 10 out of it, or maybe 50 out of it, and they will sell it for like £50 or £35.
mm,
What I've learned watching all these shows and everything is that over the years, it might not be for me, it might be for my grandchildren. This money becomes a treasure. There was one video I was watching, live, this they are normal, what they call now when they go on a road show, they are buying auctions, yeah. And a child and somebody picked a coin from the grandfather's attic, and that coin was worth close to 250,000 pounds.
mm,
And I'm like, why don't I start buying this coin, keeping it for my great grandchildren, for my grandchildren? So that's what I'm doing now. Every time they pay me, I go to the Mint website and I buy a rare coin. Like when the Queen had her burial,
the printed 20 real coins sold. They have the one for the king coronation that is coming. They have going to print some. Buy them, keep them. Most times when you make this investment, especially if you have a good job, it's not for you. It's for your children or for your children. When you say when people make money, maybe they make old money or make money from inheritance or from is all these things, all these investments, not a selfish investment. It is investment thinking about your children. Now, another advice I will need from you while I'm listening is, how do I get into stock in the UK? Because sometimes I'm trying to because when I was in Nigeria, I used to buy, shares and everything. But in the UK, it's so tight and I don't know how to break into it. The people have tried to the Fortune 500, these companies, they ask you, but if you must have like maybe 5,000 or 10,000 for you to go into stock. But is there any way or any small way of getting into stock? Like maybe like if I have a £50 here, £100 there, and I'm not doing it for myself, I'm doing it for my son. I would like to get that advice. Thank you so much for this.
I think you asked a lot of great questions. I want to just take my time and answer, because I think many people are going to just learn from the answers. And thank you for all those questions. And I think you're doing some good stuff, right? Let me start with the life insurance you spoke about. One hack I've seen is this: if you buy a house abroad, you pay 5%. So the house is maybe worth $300,000, but you pay 5%, then you own the home. So the home is yours. If you pass away, of course, the home's mortgage cannot be paid now by your next of kin because they don't have any income. Then you might lose that house. So what I've seen people do is that they buy life insurance to the value of that home. And remember, you can buy lots of life insurance. So you can buy life insurance for 300,000. And then they basically tell the life insurance company, on my passing, this fund should be used to pay down the mortgage. And if there's any balance, give it to my dependents. So what you've done automatically is you've said that you buy a house for 5%, but that house is yours, 100% paid. It's yours. You now have it 100%, which means that if anything happens to you, the house is going to be paid by an insurance company. Your kids get that house in America or in the UK, boom, free of charge. You can do that in Nigeria as well. I'm not sure of the rates in Nigeria, but that's the strategy I've seen people do that you can also incorporate. So you just buy life insurance for a house. If you buy it on that house, buy under life insurance, term loan. Just do normal term loan. Don't do any specific. Don't do any term life insurance. Don't do any funny. Just 20,000 naira term loan. You pay the premiums. If anything happens, insurance company pays your mortgage. You own that. Your estate owns that house. That's a good hack you can do. That's number one. Number two, you spoke about the retirement and how many people don't invest. Please, 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 if you're listening to me, if you're in Nigeria, wherever you are, if the government creates a retirement scheme, like in Nigeria, we have the retirement savings account. In America, they have the 401ks. They also have the Roth IRAs, ROTH, individual retirement accounts. Make sure you participate. In Nigeria, when you open up a retirement savings account, you pay 8%. Your employer pays 10%. That's a 10% salary increase for you if you have a retirement savings account. So you must, it's not, you must do those investment account. In America, most companies will tell you if you have a 401k and you invest, say, 4%, then we will match you, which means once you put money in, they match you. So you put $1 in, they put $1 in. They will cap that match. They might say we'll match you up to say 6% or whatever. But that's also free money. That means if you put in $1 into your investment, the company puts in $1. So what you must do if you're living abroad is to ask your HR, what is the company match on my retirement account? If they tell you it's 10%, 15%, max it out. Make sure you max out the company match. That's why I said you must do your emergency fund first. Number two, you must do your life. Number three, you must do your retirement. Max it out. Roth IRAs are so good, the government caps it only at $6,000, at least for 2022. Make sure when you max out your 401k, you also max out your IRA, because you are hiding, in quotes, you are taking that money away from being taxed. So make sure you max. Don't say, I want to spend money today. Guys, your most important investment is your retirement, not your current fees, but your retirement, because When you get older, you can't hustle. Number three, you are asking about or you talked about investing in coins. Coins are what we call alternative investment classes. Why they're pretty good is that they are not correlated. The coin's value does not go up and down with inflation. It doesn't go up and down with recession. Its value is simply because it's rare. It's like art. So if you buy art, even if you see those bags that ladies carry, those Belkin bags from Louis Vuitton or so, those things have a better return than bonds and even the shares of the bond index market because they are very rare. So their price tends to go up, right? So alternative investments are something you want to consider. Maybe 1%, 2% of your portfolio. If you get the really rare ones and you keep them, not even coins, comics, paintings. In Nigeria, we have all these records. You have all these old records you have. If you have those old records, try to keep them, especially if they're not open. Go to your village, all those old antique things. If it's not opened, just take it nicely and keep it. It's worth a lot. All those Atari, some people are the only one Atari, it's Atari games. Those things have a lot of value if they're unopened and well preserved. You see those old bicycles you have that you have a chopper bike. If it's looking good, keep them. You can sell them. People buy all those things, right? So alternative investments are very good. They beat inflation, or sorry, they give your portfolio diversification and they are not correlated. The last thing you spoke about was you want to invest in shares. You don't want to do, how can you get in? I will talk about the American side, right? Because I don't know the UK side. If the way to do it is to try to get an app, and those apps allow you to buy fractional ETFs. Fractional ETFs. You can buy an ETF for $25. So if you, I don't advertise, but if you get all those Robinhood type of apps, you can invest in the market. VTI, Vanguard is a huge money manager, right? Vanguard has what they call VT. If you buy VT, you bought all the stocks in the world. If you buy VTI, you bought all the stocks in America. If you buy, say, BYMI, you bought all the dividend paying stocks in America. If you buy VNX, you bought all the real estate REITs in America that Vanguard is carrying. That's a smart, cheap way for you to invest in the market. The UK would have their own version. So get those kind of apps. Then just say every month, every week, if they pay my paycheck, I take 10%, £25, I put it there, I buy the index. Because when you buy the index, you are buying the entire country, right? You're not really doing it's passive investing. You put the money there. I personally like dividend stocks. If it doesn't pay me dividends, I don't buy it. So I like Tesla, but it doesn't pay dividends, I don't buy it. Why? Because dividends sort of protect you if the stock doesn't go up. So I would say try to get. I think there's some. Is it Bull? UK guys will help me out. I don't know UK that much. The apps you guys have in UK that are fractional, like the Robinhood type of apps. Nigeria, you've got Chaka, you've got Cowrywise. They are regulated by the SEC. You can get those apps in Nigeria and invest in the US by buying all this VTI kind of equity and all that. But that's what you want to do. If you don't know what you are doing, try to buy the ETFs, understand the market. First, it's cheaper, it's diversification. Then, when you are now a pro, you can look at buying the individual stocks one by one. I took a lot of time answering you, so I'm going to let you go. Is that okay?
Yeah, thank you. I'm going to drop. Thank you.
Thank you. Let's get almost. I got the Casinator. Casinator, you've got the floor. Go ahead.
All right, thank you, Carlo, for the amazing work you've been doing. I don't know, you can hear me, right?
Yes.
So my own is a very straightforward question. Yeah, there is this I saw on your wall, and I later got an email from my RSA about the possibility of using the 25% of my RSA to get a residential mortgage. But this is something I don't really understand, and I'm really, really skeptical about. I don't know if you could maybe give some insight. Is it something someone should be thinking about? I don't know. How does it work in Nigeria? I said, like, because this mortgage looks like a foreign stuff.
No,
I
really.
don't know how it works back here, but
Great.
I would really like you to throw some light on it. Thank you so much.
Yeah, it was a great question. And we actually had a space on this. We had a space on this whole mortgage RSA for mortgage. So if you can, when you're done, try to look for this space either on my YouTube or on the podcast on my TL and just try to also listen to that. So what Nigeria has done is this. We have a pension system in Nigeria where it allows you to save for long term. So if you are 25 years old and you work, you can have that money saved till you are 65 or till when you retire. So we have this pool of long-term assets in Nigeria, and we've been looking for how to invest it. Right now, the pension fund companies like long-term assets because they have long-term liabilities. So they prefer long-term assets. And we've been looking for a way to do mortgages or how to invest in real estate. Till now, they've now brought out this policy. This policy says if you have a retirement savings account, you can access 25% of that money towards paying down a mortgage loan, right? So if you go to a mortgage bank and you want to buy a house, you can use 25% of your retirement savings accounts as the down payment towards that mortgage. So it's real, it's very, very good. It's a very, very good way. It's also what they have in America, and I don't know if UK has it, but America also have. You can take a part of your IRA and buy into a mortgage. So it gives you a chance to dip your hand into that savings that you have accumulated over the years and buy into a fixed asset like a house. Or if you are working, you buy a house, you become the house owner. Essentially, you're now doing rent to own. So it's very, very good. That's how it's going to work. So if you have a house you want to buy, they're going to ask you, hey, pay this equity down. You can run to your RSA. I think it's capped at 25%. If you need more than that, you'd have to bring in outside investments. But you and your wife can combine together and do it. So the way they've done it is that you and your wife can combine together as one and purchase that house with that down payment. So it's really a good deal for you. If you have the money in your RSA and you want to buy a house, I would say definitely take advantage of it.
All right, thank you so much. I also want to know if these mortgage companies are they really around? I don't know.
I think there are a few of them. I mean, there are a few of them. Mortgage, we don't really have mortgage in Nigeria. We have bank loans to buy a house. Key difference, right? Because it's shorter term. In America, you can get a 30-year mortgage. That's a real loan to buy a house. Because when you lengthen the loan out, you reduce the repayment. If you buy a 10 million naira house at 5 years, it's very, very expensive for you. So I think some banks, I would rather try to go with a mortgage guy that has been around for a longer term, right? Because you want to have experience and capacity. There are a few of them around. I don't want to mention any names, but yeah, try to look at it this way. Try to work with them, with the ones with the PFAs are working with, or the ones that have been around for a very, very long time. The ones that have been around have very, very expensive homes. I get it, but there are a few guys here and there. Always try to ask for past referrals, ask people that have done with them, so that we are not really burnt. But yeah, Nigeria that market will this pension act now will create a lot of these new companies that will then come out because now they know that you all have 25% equity. So it's going to boost that market now. Yeah.
All
All right.
right, thank you so much. All right.
Well, let's get EDME. EDME, go ahead, sir. You've got the floor.
Hey, Carlo. Good evening.
Hey, how you doing?
Um, yeah, I'm doing great. Thank you so much for the space. And so I just want to get some insight on investments. Okay, so you know, I read one of your tweets the other time where you talked about an accountant, like you cited that as an example, though, about being an accountant and not having to resign from your job.
Yeah.
Um, yeah, I don't know if you remember that tweet.
Yeah.
So I actually do that right now. Or something similar because I do a 9 to 5, but I also do something on the side.
Mm-hmm.
And so now, most times I am unable to like actually how will I explain it now? Like to say, okay, track what is actually coming out from, um, to track the income that comes out from, should I call it my side hustle now? So, and that which comes from the company that I work with. So it's just like I put everything together, and in the end, the two incomes just sort out everything that I need to sort out. You understand? So, could you give me any advice on how to track what comes out from my different sources and how to maybe manage that?
Okay. I think the best thing is to just get an app. I use Mint. There's also Personal Capital. There are lots of apps out there that can track all your income, can track your expenses. You can put in all your different sources, your passive income, rental income, investments, and it can give you like reports. Hey, this is what you're doing here. This is what you're doing here. Very, very, very important to track it so you can know exactly what you're doing. But let me also give you some insight, right? Let me try and make it very, very simple, right? You have five. Let me do 1, 2, 3, 4, 5. Number one is your active income. So number one is your active income. Active income means that the income you make when you are at work, you are actively at work. So your salary, or you go to work as a laborer, your laborer money they pay you, or you drive a taxi or an Uber, active income. The second income is what you call your passive income. This is like you don't have to be at work, but you have investments or you have a property and it's paying you rent. So you're not there physically, but you're earning the income. That's your passive income. So you have active and passive. Active is number one, passive is number two, right? Number three is your expenses. Number three, the first one is going to be your non-discretionary expenses. These are the expenses you must make irrespective of your income. So you must eat, you must pay rent. If you fall sick, you must treat yourself, which means these are it's not up to your discretion. You must make them. So number three are your non-discretionary expenses. You have to make them. Number four are your discretionary expenses, which means you can buy a new Chelsea jersey, you can go on a holiday or buy DSTV. These ones you can say, I'm not going to do them and nothing will happen to you. It's up to your discretion. So 1, 2, 3, 4. What you want to do, the reason why you are working is this. You want your number two, that passive income. You want that number two to start to pay your number three, your non-discretionary expenses. Your passive income, the number two, the one you make when you are not there, is your most important income source. You want to grow it so that it pays your number three, your non-discretionary income. So when you are working, your goal to get a job is to take your income from number one, which is your active income, and grow your number two, which is your passive income. So what I mean is this, they pay you a salary. That's your active income. You take your salary, you invest in property or in shares or whatever you want to invest in. The returns you make from that investment is your passive income, number two. So you see the connection. The more you invest, number one, the more you grow, number two. The more you grow, number two, the more you can easily pay off number three, your non-discretionary income. Retirement occurs for you when your number two, your passive income, can pay off your number three, your non-discretionary income. Elon Musk is rich today because his passive income, his equity ownership in Tesla, Twitter, whatever it is, right, can pay his expenses if he stays in bed for 10 years. Same with Warren Buffett, same with Dangote. But if you are still working and earning a salary, right, and you don't invest it to grow your passive income, should the salary stop working because of COVID or recession, you can't live off your salary. So then your passive income is what you're going to use to pay your non-discretionary expenses. So when we say go get a job, we're asking you to grow number one and number two. You have to buy an app that will allow you to track your income, track your passive income sources, so that you are always comparing every year. This is your target. How much of my total expenses, that's NDE, non-discretionary expenses, or even your total expenses, are you now paying from your passive income? Start with 1%. Say my goal in 2023 is that I want 1% of my passive income to pay my total expenses. And then start to give yourself a target. Every year, I want to move it up, I want to move it up, I want to move it up. That's what you want to do. That's an easy way to track those four boxes: passive income, active income, non-discretionary income, discretionary income. If your income cannot pay your non-discretionary expenses, you either have a wrong job or you have quoted many things as non-discretionary that are not. Is bribe non-discretionary? Is giving money to your mom non-discretionary? You have to ask those questions. But those four boxes whatever app you're buying, you want to make sure you can track those for. I think Mint does that. There are many ways you can track all this and make sure that every year you are trying to pay your expenses with your passive income. Make sense to you, sir?
Absolutely. Thank you so much for
Okay.
the insight. Yeah.
And so I don't want to plug my book, guys. I don't want to say I'm selling my book, but it's in the book. It's right there in the book. If you get the book, it shows you your cash flow budgeting, how you can go from passive to all that income. So if you get it, and the articles are also written for free. I wrote a lot of articles on this for free. Just Google my name, Nairametrics or so, you'd see them. So if you don't buy the book, get the free articles. I'm not trying to sell anything here, but the book does have it all in one place, right? Excellent. Jeff,
Yeah.
hey,
Thank
well,
you.
you're very welcome, sir. Jeff Spirit, what's happening? Jeff? Jeff going once, Jeff going twice. Let's get Ken AJ. Ken AJ 37. What's happening, man?
Hello, good evening.
How you doing, sir?
Yeah, thank you so much for this space. I've been learning about investment lately.
Mm-hmm.
Yeah, I'm in Norway right now, but of course I'm Nigerian.
Mm-hmm.
So I learned about this new gold ETF
Mm-hmm.
in Nigeria, and they say it's one of the most profitable ETFs in the world
Mm-hmm.
with a very high return on investment.
Mm-hmm.
So I would like you to educate us more on this new gold ETF and ETFs in general. Then, secondly, I've also been learning about index funds, the S&P 500 and the rest of them. And that this index funds, it has the advantage of compounding. So it's just, yeah. And so now for this ETF, for instance, now, I learned that you cannot really compound the ETF, that they pay out your dividends and all that. So I'd like to learn a smart way of reinvesting proceeds from this ETF, since one is thinking long term, you know. And then also you talked about trust funds. Do we have trust funds in Nigeria? And
Okay.
that's a worry I have.
Let's take this four. There are a lot, and they're going to like explanation. New Gold ETF, like you said, is an ETF in Nigeria. Why it's performing very well is because what the mechanism in that ETF allows you to, when you invest, you are buying gold. And that ETF is also traded in South Africa. So some guys found out that you can actually buy it in Nigeria and get dollars in South Africa. That's the hack. That's what's going on there. So it's a
I
number
see.
one performing ETF in Nigeria. But again, guys, I'm not making a recommendation. If you are buying today, you are buying it at the already inflated prices, because that ETF, lots of people are now buying it or now know about it. So you are buying at the peak of its performance, which means it keep on going higher. The guys that found about this ETF found it a long time ago. I remember talking about this ETF, I believe 2 years ago. There's a spaces I did or an article I did about this particular ETF. So if you've been following me, you've heard about this ETF and they've gotten in. So if you're buying now, just be worried that you're buying at the top end. But that's the hack. It's a gold ETF. So if you're buying at the ETF, you're essentially buying that you can exchange. It's sort of hedging your naira. You are exposing yourself to gold, and you can sell in South Africa. That's what's going on there, right? The second question about index funds. So guys, just understand what's going on, right? If you want to buy, sell, or sell shares, you go to the Nigerian stock market or the New York stock market or even the Nasdaq, right? That's all the stocks quoted there. Someone can create an index, just like a telephone book. So I create a telephone book of all the shares quoted in Nigerian Stock Exchange. That telephone book becomes my index, right? So index. So if I buy an index fund, I'm buying a fund that is buying that telephone book. It's buying all the shares in that telephone book. So instead of me buying Dangote Cement, Zenith Bank, MTN, I just buy the Nigerian ETF. I think there's an NGX ETF. Once I buy that NGX ETF, I have bought all those 30 stocks automatically. You could get it. So it's a faster, cheaper, diversified way to invest in a market or a sector. And you can buy that ETF with $10, $20. Most of these apps give you fractionalized purchase. So you can buy that ETF index fund as a fraction, and you can get the same thing as that market. I'm not recommending VT that's Vanguard. VTI, that's for the US and all that. So if you just go to Vanguard or Schwab, they have lots of ETFs. Even Nigeria, IBTC's got lots of index funds. UBA, not index funds, but they've got lots of funds that invest in the market, right? UBA also has, Afri Invest also has. So do your research. Also, I wrote an article on ETFs in Nigeria and abroad where I listed all the ETFs in Nigeria. I give a lot of insights. Just Google Kalu Aja ETFs, Nairametrics, it will come up, or get the book, it's there. Let me also answer your question on how you can reinvest ETFs, right? On most of these apps, there's something you can create that you can do dividend reinvestment. It's called DRIPS, DRIPS. So when you select that option, the ETF company will automatically reinvest your dividends. You don't have to tell them anything. So once they pay a dividend, they'll just use it and buy for you next day. Any ETF I buy, I always select reinvest option. I never buy it if it doesn't have reinvestment. I don't have the time now, so I buy it's reinvested for me. So Google Drip, if you go ask the app, hey, do you guys have this feature? Let's have a drip feature. Also, most companies also give you a drip plan separately. So if you go directly to say this company A, you can say I want a drip plan. So if they pay you dividends, they just buy you more shares automatically. You don't have to ask them. So make sure you ask them about that. Then your last question on trust funds. Yeah, we have lots of trust funds. Many banks have trust subsidiaries. Many lawyers will do a trust for you. All a trust is just a company set up by a trustee that has the memo. So you just say, hey, my trust is to put my house in my village, my car in my trust, everything is going to be my trust. The advantage is that nobody can come to you and start saying, oh, you're my brother's cousin, I took your money, blah, blah. If you're not in the trust, you're not in the trust. So you see these American kids, they are trust fund babies. That's what they do. And trust funds also allow you to do what you call skipping a generation. You, as a guy, can say, I'm not going to give my money to my child, I'm going to give my money to my grandchild. What are you doing? You're avoiding taxes, because if your child doesn't get the money, there's no transfer or estate taxes. It goes to your grandchild. So you skip that generation and it's passing to him with a lower tax base, right? The kid has a lower tax base. So speak to a lawyer. You get lots of good stuff that you can do with trust. Yeah. Great questions, Ken.
Yeah, thank you so much.
You are very welcome.
Can I ask just one more before I go?
Sure.
Okay, now, man, one of my worries is the unstable nature of the naira, and so the when I heard about the gold ETF, my interest is that when you invest in this gold ETF, it kind of helps you to hedge against what they call against the loss of value. So that's one of my interests. So I think if
Yeah.
it's quoted in,
I hear what you're saying. You want to hedge against the naira by buying into a commodity like gold. I hear you, but because
mm,
you're buying an ETF, make sure you look at the price that you are getting in now, right? I don't
mm,
look at, maybe if they give you, look at the historical price and ask yourself, if you bought gold through other means, right? Because you're in Norway, so you have lots of options. You can buy gold directly, you can buy Barron's gold, you can buy the ETF, you can buy a company that mines gold. You just want exposure to stability. That's what you're asking for. So
mm,
on your app, just Google commodities gold ETFs. You give you lots of options. There's Alaska, there's everything is all there. So because in Norway you have tons of options, look at them and see if they fit, and look at the new gold ETF as well and see if it also fits. You want stability and liquidity. You can buy a gold ETF or Barron's gold that gives you either a direct access to gold or just access to gold reserves. So look, even if you buy the US, the Russian ruble, it's now linked to gold, Abby. So that's also exposure to gold. But what I'm trying to say is this: try to broaden and do your research before you just invest, right? That gold ETF
mm,
is now over. People know it now. So the price you buy might be overinflated now because of pure demand and not just because of
mm.
the intrinsic value of the actual gold that they have. That's what I'm trying to tell you.
Thank you so much.
Excellent, bro. Thanks you. Hey, Jerry, access to finance. What's going on? Jerry Osagi, what's happening?
Hi, Kalu.
What's
Good
up?
evening. Can you hear me?
I can hear you very well.
Kalu, thank you so much for everything. When I'm rounding this off, I have to talk about your book. I know you're trying to avoid, marketing your book here, but let me start with this. If you're going to enjoy what Kalu is saying, please read that book. My last trip, I had 6 hours on the flight. It's always beside me. I'm an author myself, but I can recommend that book any day, anytime, anywhere in the world. I can tell you that. So please, don't be afraid to talk about that book. It is loaded. So I'll just quickly just to add something and also tell Carlo to just explain a few things further. The first thing is that you have talked a lot about Ponzi scheme this year, and you have warned a lot of people. But when you are in a period of recession like this and challenges, financial challenges across the world, Ponzi scheme and fake investment tend to rise. I think it's important when we review 2022 investment and looking forward to 2023 that you also re-emphasize that Ponzi scheme will come back, and people need to watch those too good to hear investment. It is important because it can erode capital. So as we look into 2023, it's important that we recognize somebody coming with a return of 50%, 100%, and the likes. So it's something, maybe Carlo, you just point out those 1, 2, 3 and say, these are the things you will see when this investment is a no-go area for the Ponzi scheme. Secondly, I also try to add my voice to the lady that was talking about losing her 400K. That is very painful, but she shouldn't give up. You said something that is critical. A lot of people want to invest, but you are going into 2023. Maybe you're struggling with your finances and the income is low. If you recall, and we find out this year, a lot of people travel, they left their job, and there are shortages. So I would advise people who want to invest, who don't really have a job or struggling, to do a research on the industries that are losing a lot of their staff and the kind of staff they are losing. So that discipline, technology, product management, healthcare, those areas, get a skill. Or if you have a skill there, brush up that skill. You can use that to increase your earnings. And based on that earnings, you can save from their saving, which is the first income that Carl was talking about. Then you can move to the second income by using to generate investment. It's important we do that, and we can also increase our earning for 2023. Of course, another thing I want to say, for those that are self-employed or you're business people who want to invest in everything you are doing for 2023, it is important to look out. I mean, we've talked about the emergency fund. We've talked about the second thing in terms of the life insurance. We've talked about the retirement savings fund and going with exchange traded fund. One thing it's important to look at, your health is critical for investment, for financial, because the health can actually erode everything they have. So it's important you look out for health insurance. No matter how small, please get a health insurance if your company does not have, or you are self-employed or you're a business person. It is important for you. So these are just the things I want to add. And finally, don't rush into credit. Please learn a lot before you take out credit. It is very good that you take credit, but please learn a lot. Those are the things I want to add, and I will end again. Please try and get Kalu's book. Very, very informative. Thank you very much, Kalu, for this opportunity. Thanks.
Please, I can't hear anybody, please.
So sorry, Jerry. So sorry, guys. I think I was on mute, right? Jerry, I appreciate your comments about the book. I do appreciate it, right? Guys, if you can get the book, try to get it. It's my 22 years investing experience, i.e., working, just experience me working in private equity, investment banking, corporate finance, stockbroking, all all that stuff, just my experience in all that. That's what I've tried to put in a book for you guys. 22 chapters, 252 pages of just real life experience, right? So if you do get the book, it gives you a lot of what all I'm saying, right? And you can have it all. I also have all the articles on the book are in articles I've written, so you can also search for them. I try to make it very simple for you to follow. But that's it. Let's talk about Ponzi schemes. Folks are still doing Ponzi schemes because they want to get rich quick. There's this idea that if you do a Ponzi, you can jump and you can make money. That's wrong, right? People invest in Ponzi because they don't know, but some also invest because they know but believe that they can make the money before the Ponzi crashes, right? So let me just help out again here. Let me quote one Ponzi out there. Um, Omega Pro. Omega Pro. That's a Ponzi. I'm saying it openly so they can sue me. Omega Pro is a Ponzi scheme. If you have money in Omega Pro, it will eventually crash and you're going to cry. IPC, what's the name? Is it International IPC Capital or something like that? That's a Ponzi scheme. It's already crashing. It's going to crash and you're going to lose your money. I warned about MBA Forex. Many of you were arguing with me on the TL. It's crashed. I warned about MMM. It's crashed. It's not hard to see a Ponzi. Ponzi is like porn. When you see porn, you can't define what porn is, but when you see porn, you know it's porn. Same thing with the Ponzi scheme. But I'll help you guys out here. If somebody is offering you, if you see the terms investment and you see the term guaranteed return, that's fraudulent right there. Any investment, or specifically trading, if someone tells you, I will trade and I will give you guaranteed return, that is a fraudulent statement. You should not go near that investment at all. Trading and guaranteed returns is a fraudulent statement for any asset class, currencies, shares, bonds, crypto. Once they want to trade and I guarantee you return, that is fraudulent. That's what Mr. Benny Madoff was doing. Bernie Madoff was giving people guaranteed returns on trading, and we know saw how that ended up. So if you see high returns higher than the risk-free rate in Nigeria. The risk-free rate in Nigeria right now is about 15%. So if someone is offering you 50%, you want to ask yourself, what are they doing with that money they're taking from you? If they are, why are they taking money from you? Why can't they just borrow money from the bank and go invest in what they're asking you to invest in? Why must you give them money to invest? If they're making 50%, they're not investing in what they had already. So high returns, promised returns are a red flag. Number two, if someone promises you a return, the person is offering you a bond. If the person is offering you a bond, then where is the sinking fund set up to repay you? So if someone says, hey, I'm going to give you this return, okay, where is the fund that you're going to use to pay me? Where is the fund? Ask those questions. Do you have a sinking fund? Where is it? Where's your trust? Show it to me. Also, regulation. Are they regulated by SEC? CAC registration doesn't mean anything in investment. My gatesman can have a CAC registration for any company he wants, but SEC has got to regulate not just the company but the offer, Securities and Exchange Commission. So if it's not registered by SEC and they are selling you a public security, do not do it. It doesn't mean if it's registered by SEC it doesn't mean it's registered by SEC that it is not going to fail. No, but at least use that gateway of SEC to seep out the guys without SEC registration. And last one, guys, please don't believe all this is insured. The insurance companies are not insuring the contract. There is no insurance for trading. There is no insurance for gambling. What the insurance companies are insuring is the assets of those agricultural firms, not your investments. When they tell you we're insured, it's not true. Make sure you ask the question, what is being insured? There is no insurance that insures you when you are trading and you make a loss. Those agricultural firms have insured the farm building, but the farm building is being paid to them, not to you, the investor. So please ask questions. Don't believe all that hype. And I always have a standing offer. If someone makes you an offer, securities offer, send it to me via DM and say, is this real? Don't ask me what about, what if. Send me the exact offer they sent to you. Send it to my DM. I don't charge you. I will tell you this is nonsense. Don't invest or run away. Standing offer. So you don't have to say, I did not know. I'll help you out. Send me the DM. Don't send me, is this company good? Is that company good? No. Send me the exact offer they made to you. Just do a screenshot, send it to my DM and say, what about? Just say question mark. I'll answer you, right? Excellent. Let's get Jeff. Jeff, I think you've spoken. Jeff Spirit. Jeff, what's up? Jeff Spirit, or let's take Dolakbo, Mr. Jung. How do I say this? Dolakbo with the Nigerian flag, Mr. Jung B. Go ahead, sir.
All right. Good evening, Carlo.
Hey, what's up, man?
I'm all right. And you?
I'm doing very, very well.
All right. I need to appreciate you for all you've been doing. This will be my first time on this session, right? Uh, I've been following you right from I think since the beginning of last month when you tweeted something about the number of barrels that Nigeria exports and the return they get from it and all of that. Well, I think for now I'll just have to leave the Nigerian topic for another day. My I would like to comment on what you just finished talking about. Talking about the what was it called? The Ponzi scheme. Before now, I think about last year or 2 years ago, there was this. I don't know if you know about it. VGC, Votac, Votac something. I can't really remember the name. Then they were offering, I think, about was it 25% return on investment. Just is just all these companies are just take your fund and they just assure you of a guaranteed return. Well, what I would just want to say is people should always try to disregard all of those things because either you like it, they'll keep, you know, kind of reframing and, kind of developing and modernizing uh, their mode of operation in order to entice people to, commit to them. So I just want to say that people should always try to disregard them. So now, my question is, please, are you there?
Yes.
Yeah, all right. Someone talked earlier about mint coins. Presently, I'm in the UK, so I would just like to know further. I don't know if she's still here, and if she's not, if you have any idea about it, maybe you can just say one or two things about it, namely how to go about it, and if really it is profitable, and how to really get into it. That's one. Then another thing I would like to know is, between stock and bond, they have a kind of inverse relationship, right? I don't know if I'm correct.
Yeah, go ahead. Ask your
All
question.
right. All right. So, well, I would like to, with 2023 in view, I would like to have your opinion about it as to which of them to invest on, take for example, when you're talking about stock, it's kind of dependent on the profit or the profit of the company, and in a year whereby the company does not make such a huge profit, so to say, your return on investment, or let me say your dividends, will be kind of uh, limited or almost not guaranteed. So, with that in view, what will you say about it? Uh, what would you have advised? Which of them to go for? Is it stock or bond? And another thing is talking about the index fund. Like we have here in the UK, I think the index for UK is the FTSE 100. So now, with that, the what would you advise? Is it now okay? What does it mean that if I'm buying or investing in the index fund, does it mean I'm buying the stock of the 100 companies listed under FTSE 100? That's all I would like to know. Thank you.
Okay, so good questions. Let me see if I can answer them real quick for you, right? So she's
Yeah,
talking about investing in coins. So she buys these rare coins, right? And then
yeah.
they sort of like buys them. Those are what we call alternative investments. What you're buying like artwork. You're buying like a Bruce Onobrakbaya painting, right? You're trying to buy something that its value is going to be held up because people want it, right? The reason why those things are quote unquote good investments are because they are uncorrelated to normal asset classes, meaning that even if there's a recession or there's an inflation, it doesn't really affect the price of a painting. A Picasso is a Picasso. If inflation is going up or down, the Picasso does not care. If you want to sell your Picasso tomorrow, there'll be someone that wants to buy your Picasso. Same with these coins. But remember, these coins are produced, they get valuable when they are scarce. So the less that is produced, then the better they are. So if you look at the coins that sell the most, these are coins that were produced in say 1920s and maybe they had a mistake and were discarded. They now become very valuable today because there are very few of them. So it's like buying stamps. If the stamp is rare, the stamp has value. Or buying an expensive handbag, or buying an expensive record player, and you just keep it to the park. That's what is called buying alternatives. Buying wine that you never open and you keep in a climate controlled place. All those are good if you can afford them and if you understand that market. So it's all about understanding the market, do your research, and then having. I would say do 1-2% alternatives. It's not bad. Ladies' handbags now, if you have a Belkin handbag, that's an asset, no longer a handbag. If you have a good watch, a Rolex watch, it's the exact same thing she's doing. So you might want to just check it out and say, can I do this and what should I do? But coins are very popular. They are cheap to get into, but do your research. Many don't have any value. Many are just hype, right? Silver coins, gold coins, you are also buying the silver and you can exchange your silver for dollars later on. So that's another good way to look at it, right? Then you
All
talked
right.
about stocks and bonds. So when I started off, I was very clear, right? There's no good investment, there's no bad investment. Stocks are not better than bonds, bonds are not better than stocks. What it is that stocks behave differently in different situations. Same thing with bonds. What we have seen, and I shared this, if you look at this space, I shared the graph of a guy that invested $1 from 1926 and a guy that invested in bonds as well from 1926. So if you went to the US market and you bought a share in 1926, you used $1 to buy one share in 1926. Today that share will be worth $14,000. But if you bought bonds, that bond will be worth $288. If you just held cash, it's going to be worth $21. That's from 1926. This is the US market data. I posted it on this chart. Does it mean that stocks are better than bonds? No. It simply means that stocks have performed better than bonds. But it doesn't mean it's better. It means that if you are looking for this objective of growth, you want it to be in stocks. If you're looking for the objective of defense, income, you want to be in bonds. I will not advise a 70-year-old man to buy shares because I want him to get 14,000. So you've got to go back and ask yourself, what do you want to achieve? If your objective is income, you are buying bonds, irrespective of the return. Because you can't buy equities, the whole money can go and you're worse off. If you're a younger person, has a longer time to invest and can absorb volatility in returns, then equities are for you. So the question in 2023, and I put it this way, I think it was in another space earlier. If you believe Nigeria is going to grow, the economy of Nigeria is going to grow, then you're looking at equities. If you believe the economy of Nigeria is going to be a bit wobbly and stagnant in 2023, you might be looking more at bonds. It doesn't mean 100% equities, 100% bonds, but you want to build a portfolio that is overweight in line with what you believe in. So if I believe that I'm not sure this economy, I just want to hide myself and just wait to see what's going to happen, I'll just buy bonds and just wait, right? If I think that the economy is going to boom, there's going to be investment, the GDP is going to double, I want to buy into that growth of the economy. Hence, I am buying equities. So we're not giving you a recommendation, we're telling you how you want to look at the market. There's always a rotation from risk to risk off. Right now in America, the sentiment is risk off. People don't want to take risk because they are scared of a recession. But once the money flows to bonds, if people think are more comfortable, it goes back to equity. So it's that rotation of the money that moves prices up and down. So I hope that answers the question on stocks and bonds, and also answers the question on the coin trading. Very, very important. So that question, you're good, right?
Right. You've not talked about the index fund.
Yeah, index funds are basically a way for you to buy. I use the example of a telephone book. If I go to the Nigerian stock market, right, and they put all their stocks in a book, that's my index of the stocks in that market. If I buy
Okay.
all the stocks in that book, I bought the index. So by just buying one, I bought everything. So I like them personally because it's a way for you to diversify at a cheaper price and buy a large amount of holdings. So if I was going to buy US stocks, I would first of all buy the index before I buy the sector, before I then buy the individual stocks. That means I'm looking at maybe VT, buy all the stocks in the world, then maybe VT, I buying all the stocks in America. Then I can get particular and say, okay, I want to only buy technology stocks in the US, and I go buy the ETF for tech stocks in the US, or I can say I want to only buy property in the US that pay dividends, and I go and buy that particular investment that pays me a dividend in that country. So you see what I'm doing? My
Yeah.
objective where I put the money, and ETFs allow me to invest cheaper. I can invest cheaper, right, with the ETF. That's essentially what I'm trying to do. So does that mean, do you have any comeback, or does that answer your question, sir?
Oh yeah, yeah, that's all right. Thank you very much. I really appreciate.
Great. Great. And I think someone made a comment on health insurance. I always said insurance for life. Also try, like you said, also try to buy health insurance because that also protects you, not just to lose your life, but if you are incapacitated, health insurance kicks in. So always add that health to the life insurance, just like I've said, right? Great. Onyeka, just Ujebe Onyekachi. You got the floor, sir. Go ahead.
Yeah, good evening, sir.
How you
I
doing?
I really appreciate the space, and I've learned quite a lot of things about
Okay.
investment.
Thank you.
I want to ask you a question. How can someone have a direct contact with you? That's number one. And then number two, what real estate investments are like, or what is your projection for the real estate investment in Lagos State for 2023? Thank you, sir.
Yeah, so if you want to contact me, I'm on Twitter, right? We're talking. You're already speaking to me. So just remember, guys, I'm a licensed guy, so I can't give advice. If you ask me on DM, I can't give you advice just because of my licensing, right? I can give you broad. We can talk broad like we're doing now. I can give you my opinion. I can educate, but I'm never going to tell you go buy this. I'm never going to tell you this is going to happen or that's going to happen. Just keep that in mind, right? So to your next question about real estate. 2023 is going to be a year of we're going to have a new president, right? And that new president has got to create jobs, has got to invest. So all three guys, the three front runners are going to do a lot of spending, and housing is just one quick way to invest. I'm disappointed that we haven't really tapped pension funds, unemployment, and housing. We haven't connected all three to create millions of jobs and create an ecosystem. Perhaps the next president will get it and will do it. So it depends on the kind of houses they want to build in Lagos. If you start building this 4 bedroom duplex in Lagos, you're wasting your time. What Lagos needs is this high rises, like 1004. We need to build 1004 in Lagos every year for the next 10 years. If you do that, cement prices go up, iron rods, paint, nails, labor. Look at all the shares we're quoting now. When we just say this, cement, paint, aluminium roofing, all those prices go up. And most of these companies are quoted, or there are companies that supply those companies that are quoted, or there are banks that fund these companies that are quoted that are going to drive this. So it depends on how the new president is going to approach real estate investing in Lagos. We already know Lagos is quote unquote an island. So the house prices in Lagos, the land prices in Lagos are going to keep on going higher and higher simply because of demand and supply. So a house in Lekki or a land in Lekki, right? The price, the price or the value of that land is just going to keep on going up because of inflation and demand. We know that already. The problem in investing in Lagos is the yield, not the return. If I take $1 million which is, let's just convert $1 million to say 500 million naira. If I take 500 million naira and I buy land in Lekki, right? How much would let's say I build homes and I have those homes. How much will I rent that house out at? If I build a home, let's make it easy. If I build a home with 100 million, what's the rent in Lekki? Can I charge 10 million naira rent for that house? There are other houses. Why would I pay 10 million naira rent? Can I charge 5 million? So if I charge 10 million naira rent, I'm making 10% on that investment. That's the yield, 10%. I can take that same 100 million naira and buy federal government bonds and make 14%. So you see already, the yield on investing in real estate in Lagos, especially because of the expensive land, is very low. People confuse the returns to the yield, right? The yield is very low because it costs you a lot to build in Lagos. You've got to buy the land first. But if I took that same 100 million naira and I went to Ibadan, I would not spend 100 million. I would get lower rent, but it's cost me less to build. So my yield in Ibadan or Jos or Kogi is lower than, or is higher than my yield in Lagos, simply because I am not spending as much in Lagos that I will spend in Ibadan, instead of the other way around. So what that means tells you is this: if you want to invest in Lagos, be very careful. When you buy the property, you've made the profit. So if you buy expensive, you are never going to make a return unless that's going to be your home, in which case you are going to make the return because you're no longer paying rent. But if you are buying land to rent out or to build a house and renting out, I think that right now is a very, very tall order. What I've seen many people do in Nigeria now with real estate in Nigeria is to convert the homes into short let. So they build the same house, but it's on short let. You can come in and stay for 1 week, 2 weeks. So they are turning around that same rental twice. So instead of making 1 million rent, they're making 2 million rent on the same capital investment. So their yield is getting better. So in terms of real estate in Lagos, look at the yield, not the asset price. The asset price is immaterial if you don't have liquidity to trade, right? If you own a home in Lekki that is worth $1 million and you can't buy gala like a Sarah, then what's the point? So you've got to make sure you are looking at liquidity as well, because liquidity allows you to then take advantage in Nigeria of the opportunities that would come. So did that answer give you a bit of an insight there?
Yes, sir. Yes, sir. I
All
really
right, look at
appreciate
yield. The summary is look at yield, not just the return. Look at the yield. Yield is not return. Dividend is not dividend yield. Dividend yield is what you should look at, not just the dividend. Look at the dividend yield. All right, nice one, Yeka. Gabriel, you've got the floor. Gabriel? All right, let's get Mr. I
Can
am
you hear
Eric.
me? Yeah, Gabriel is
Yes,
here.
yeah, go ahead, Gabriel.
Yeah, thank you very much, Carlo. I've been wowed by learning from you this evening. First of
Thanks.
all, I would like to get your book so that I will learn more. I'm in the oil and gas sector. Where I work, we have like three categories. We have the employee, we have the labor contract, then
Mm,
we have the service contract. So I fall under the service contract.
mm,
And in the service contract, we don't have what is called the pension fund. The labor, they have the pension. The employee, they have the pension scheme. But with the service contract, we don't have such advantage. We are paid, everything is lumped into our daily pay. So
mm,
how do we take advantage of this pension? Because at the end of the day, when you stop working, you don't have anything. What is only
mm,
what you've been able to save. That is, if you are good in saving, that's what you are
mm,
left with. Like
mm,
recently, some guys were just laid off, that they are already 60. That the new rule they have now, once you are 60, you are laid off
mm,
without pension, without pay off, nothing whatsoever. So,
mm.
what advice do you have for people like us so that we can invest, so that at the end of the day, when we retire, we'll have something to fall back to?
Great question, Gabriel. I love that question. I mean, that question, we can extend that question to say, what if you're a gig worker? You don't have a 9 to 5. You don't get salary end of the month. You might get 1 million in January. You don't get anything again till June. Then you get 10 million in June, nothing again till September. How do those guys invest? That's a great question. So let me answer you specifically, right? The Pension Reform Act allows self-employment, which means that you can go in and register as a self-employed guy. And they have this firm. Let me drop their name for you. Awaba. That's on Twitter. Look for them. AWABAH. Awaba. Right? They do this informal sector enrollment into the pension funds into the pension scheme in Nigeria. So what you can do is you can pretend that you are working and just pay your 18% or 20% directly yourself. So you can just open your account, put yourself as your employer, employ yourself, then pay your pension. You pay your employer, pay your employee. You have your account up and running, right? So you can do that for yourself as according to the laws of the Pension Reform Act. But even if we're talking about investing as a whole, what you want to do is to try to estimate if you make annually 10 million, maybe it comes just in January, divide it into 12 or so, and then make your payments monthly into an account. So try to have a set schedule to put money aside. Either you invest when you get the money. So you say, once money comes into my hand, I take out 10%, I put in my investment account and I invest that 10%. Or you say, every month I will just invest the monies 10%, January, February, March, April, May. You want to have a set way you do want to do it. Either you say, once I get money, I invest. So if I get my gig, if they pay me $10,000, I take 10%, I put in my investment. End of story. Or every month, I will take X amount of money and invest, irrespective of what happens. Anyone is good. What we're looking for is the consistency of you making those daily investments in. Don't invest today and say, I don't get money tomorrow. Make sure you are consistent. Either you invest 10% or every time you get it, 10% just an example. You can do 15, you can do 5, you can do 1. Either you invest when you get it or you invest on a set schedule. But you want to be consistent about how you are investing. You want to build it up because the way investment works, if you open up the equation on how we pay you interest, it is raised over time. The longer you invest, the more money you get. Investment is raised over time. Compounding is a mathematical formula that takes time into cognizance, not interest. It is raised over time. That's why Albert Einstein called compound investment the eighth wonder of the world. It is over time. So the longer you invest and compound, the more money you make. If you invest when you are older, you will not make as much money when you are younger because your older years give you less time to compound. So what I'm saying is that if a kid invests when he's 20 years old at the same interest rate as you, and you invest twice what that kid is investing, but you have a shorter time to compound, the kid that is investing less than you, same interest rate, tends to make more money than you on a return basis because you have no time to compound. If you're not compounding, your money can't grow. It's like taking the money and put it in your room and saying you're going to make more money than the guy with money in the bank. Your 1 million in your room does not generate the returns that my 1,000 in the bank is generating. Does that make sense? Your 1 million naira in your house is not generating the same return that my 1,000 in the bank is generating. Does that make sense, Gabriel?
Absolutely, absolutely. Thank you very
Yeah,
much.
so look for them, Awaba at AWABAH Nigeria. Awaba, our money, our Awaba Nigeria. They do this informal, open an account with them, start to do your informal contributions
Okay,
there.
okay. I will check it out. Thank you.
Super. Kahana, you got your hand up. Kahamara, Mr. Famzi, you got your hand up. What's up? I know you have spoken before. Well, did you have a comment to make or an addition to make?
Well, basically, what I wanted to say, I think I've gotten clarifications, but I
Okay.
want to ask one simple question. I know there are some of us here who are listening to this who basically earn 100,000 naira or even less in Nigeria right now. And considering the even living expenses and the inflation and everything, you can't even survive on 100,000 naira or less in the country. What's your advice to these people with respect to investment?
The
Thank
best
you.
investment they can make is to invest in themselves. So if you are earning a very low, I mean, just 2 days ago, we were talking about bank workers, what bank workers are earning in Nigeria. I was shocked. I had not looked at that entry level amount. Bank workers, entry level, the casual staff, some are earning less than 100,000, some earn less than 200,000. So it's to your question, how can a guy that works in a bank that is counting billions be making less than 200,000 naira a month in Nigeria? I don't think that's right, right? So the best investment you can make as a poor, quote unquote, poor earner is to invest in yourself, learn a skill. People say, I don't have money to eat. How do I learn a skill? But that's the only thing you can do, apart from complaining. Half
Okay.
the total Nigeria has got the second largest group of IT professionals in Africa. Number one is South Africa. Number two is Nigeria. This is a report I saw from Google IMF. They did a report together. In Nigeria's case, half of the trained IT folks in Nigeria, half of them were self-taught. They didn't go to university. They didn't go to any school. They went online, learned, and got a certification. So many guys in Lagos are just making lots of money in dollar terms, doing skills on Fiverr, just doing their IT skills, earning money. They didn't go to school. No one has a BSc coding. There's no BSc coding in Nigeria. So all the coders are all outside Nigerian university. They've all upskilled. They take their money, they upskill. I met a girl in Abuja. Was staying in a hotel in Abuja. She is a student in a school in the east. She comes to Abuja, and over the weekend she has this laptop. She does editing for Nollywood movies. So she gets the raw movies and she'll go to her hotel and then she'll edit the movie. So she'll cut out all the noise, all the whatever. This guy's university. She does like maybe 3 of those a weekend. So she just sits there and does all that stuff, takes it back. That's how she paid for herself to go to school, paying for her kids also to go to school. She learned that trade. Someone showed her in school. She went online, learned it, how to do video editing. So those guys will record videos. She give it to her. She will remove all that background noise, do the cutting, give them back their CD. So upskill. There's not, I wouldn't say go and invest in shares or stocks. I would say number one, save. If you don't save, you can't invest. What is saving? Saving means you don't spend everything you make. So once you don't spend everything you make, go and learn a skill. If you learn a skill, then you can get more income, then you can break free. There's no other way now. You can't complain. So if you can't complain, go do something about it. Try and upskill. Don't try to invest in crypto to make more money. No, invest in yourself. Learn a skill, grow your income. That I think is the fastest we can go about this. Yeah. All
Okay.
right.
Thank you.
Yep. Okay. So
Thank you. That
um,
answers my question.
yeah, go ahead. So Saint, just real quick, Saint underscore Baba, how are you doing, sir? Saint underscore Baba, you've got the floor. Go ahead, sir.
Hello, good evening, sir.
Oh, you got your audio is poor. Saint, your audio is poor. Could you just take that and call?
Hello.
Give me when you fix your audio. Yeah, go ahead. I can hear you, sir. Sorry about that. Fix your audio. Hey, Mister, I am Eri Olua. What's up, man?
Hello, are you hearing me? This is
Are you? Okay, Olua, hold on. Saint B, I can hear you. Go ahead.
okay. Good evening, sir.
How you doing?
Fine, sir. The session was very fine and awesome. I really learned a lot from it. So I've been following through, and this might be my first time joining actually. I just
Okay.
have 2 questions to ask. Hello, are you hearing me?
Yes, I can. Go ahead.
Okay. My first question is I joined late and I heard when you were talking to a guy about some ETF and some 4 other things that the guy can do. Actually, I've got the knowledge of that ETF, but I could not get that 3 others that you spoke to the guy earlier before joining. I overheard that, and I've even sent a message about that. And my second question is now, as a let me say a young investor coming to investing for 2023 with a minimum salary of 50K, how can I save to invest so that to make that 2023 to make my investment to like grow, or how can I go about it? Which investment startup can I push into? That's my question.
Yeah. Let me take your second question first. So I think, and I'm just being respectful here, sir. Did you say 50,000 naira a month?
Yes, sir.
Yeah, I mean, bro, if you earn that amount of money, what I would say is this: try to go and learn a trade. Don't try to buy stock or something like that. Try to go and learn a trade. And when I mean a trade can be anything. Go and learn from someone. Learn something that you can then increase that income to 100,000 a month.
Okay.
Even if it's welding, even if it is how to fix AC, go and learn a trade, right? Or IT, learn that trade, then your income can go up. That's 100% return right there, and it's risk free, right? You just go to Lagos, look for something you think you have a passion for, and someone that can train you. Go and learn from them. So when I mean learn from them, either you pay them to teach you, or you go and work for them. But you want to learn what they are doing, so that you can then go and start doing it. If it means going to write ICANN exam, or going to join union to learn something, go and do something that will increase your income. Your number one job, like I'm going to go over the first thing I told the guy. Your number one task is to increase your income today. That's what you want to do to increase your income.
Yes.
You don't want to save to invest. You want to save to invest in yourself. And saving is just you want to spend less. But at 50,000, you are struggling to even save because you're earning you are earning less than even if I convert, I don't do this, but do you understand my point, sir?
Yes, very well.
Try to grow your income. That's your number one task in 2023, right? And let me just you alone, or just you alone. You can send me a DM. Just you alone. We can work on DM. You and I.
Okay,
Just
sir.
you alone.
Okay,
Let's
sir.
talk on DM, right?
Okay, sir.
What I
Okay, sir.
told that guy was that if you want to, the steps you must do before you invest. You must do this before you start to buy shares or stocks or crypto. Number one, you build your emergency fund, 3 to 6 months of your non-discretionary expense. So you must have like your piggy bank first. Number two, you want to buy life insurance if you have dependents. So if you don't have dependents, you don't need to buy it. Number three, you want to save for your retirement. But you see, these three things, I don't think you can do them because you don't have the income to either do retirement or the life policy. Even the emergency fund might be hard for you because of your level of income. So your number one task is to grow that income. Does that make sense, sir?
Yes, very well, sir.
Okay, so when we're done, send me a DM. We'll talk so we can work better. Just you, sir. Don't please, just you alone. Yeah. So yeah,
Okay,
we'll
thank you
talk.
very
We'll
much.
talk offline, right? All right.
Okay.
Thank you.
All right.
I am Eri Olua. Go ahead, sir.
Good evening, Mr. Kalu. Thank you
Yeah.
so much for the wonderful session. Thank you so much.
Yep.
It's been wonderful. And I celebrate you, even though in Africa we rarely celebrate people when they are alive. So I do celebrate you. Thank you. And good evening to everyone. I want you to please emphasize the importance of financial education and the issue of crypto, because if you notice, even the person, one of the persons that spoke earlier on, spoke about how he lost money into the forex and crypto. I want you to please emphasize the importance of financial education and people actually taking their time to learn forex and crypto on their own. If they so like it and they want to invest in it, I think it's better for them to know. So if you can please speak about it a little bit, and also I want to challenge people to please buy your book. It's a wonderful book and they will gain from it. Thank you.
Okay. So
Okay, so let's
let me mute you. I
so let
think
me
it's a
meet you. I think it's
okay. So let's talk about this. Like you rightly said, if you don't know something, right, you can't partake in it. Right now in the world, Canada, some states in the US, some states in the US are now teaching their kids about money, how to invest. And we're talking about very, very basic things: compound interest, budgeting, right? If you just know what compound interest is as a child, do you know what that does for you? I have a friend in the US, right? Look at what he did. His son is 16 years old. His son, he employed his son to cut his own grass in his own house. So he owns a company. He employed his son, who is 16 years old. His son's job is to cut the grass in his own house and, of course, neighbor's house. He pays the son a salary. So the son gets a paycheck. The son gets a paycheck. The guy takes the 100% of the paycheck and he opened up a retirement account for the 16-year-old boy, an IRA account. So he puts the son's paycheck into that IRA account. So this boy is 16 years old. His dad is paying him a salary that is like a salary, but he's putting it in investing for him. What's the dad doing? No one, the dad is not paying taxes on that investment because any money he puts in that IRA, he doesn't pay taxes. So he's claiming also the salary as an expense on his business line. So he gets expense, he doesn't pay taxes. His son does not pay taxes because he's going into an IRA. That boy is going to grow up to be 40. That account is going to still be running till he's 60. This simple thing that his father has done has set him up for life more than many American kids because he's going to have start off life with capital. All American kids will start to get a job. This is just financial knowledge. His dad knows if I do this thing, it will help the boy. And there are other hacks in Nigeria as well. I told you guys one time, if you have a company, employ your wife, employ your kids under your company name, pay them a salary, and give them RSA. It's legal. That's what Nigerian law says. Employ your wife, pay her salary, employ your children, pay them salary. Someone says my child is a kid. Okay, your kid can do advertisement now. Take picture of your child, put him on your annual report. So your child is a model. Pay him 500,000 naira as modeling fee. Pay your son. His job is to make coffee and to clean your dustbin. The law is the law. I'm not breaking. I'm just giving you what the law says. The money you put, you avoid paying taxes on that money you pay your wife and your child. Instead of giving your child an allowance, if you open up an RSA for your child, it's the same thing you are doing, but getting a tax break. Same thing if you buy life insurance, you and your wife, or buy health insurance, you and your wife, you are avoiding paying taxes as well. So you've got to understand how money works to take advantage of money. You can't go and watch football if you don't know football rules. Neither can you go and so if you don't understand money, how money talks and how money moves, you can't make money. You have to understand money to then know how to invest money. So education is very, very important. Let's talk about all this crypto thing. Let's talk about crypto. Let's talk say currency trading in particular. I see many people, I always see this stuff. Oh, I want to invest in currency. It's not fake. It's okay. The question is this: what is the profit on one trade on currency? What's the profit? Do you, in percentage terms, what's the profit you're making? If I know currency, this is what if you invest $1,000, do you make 2,000? No, you don't make 2,000. You are making a peep or 2 peeps or 3 peeps or whatever, which means that you need a humongous amount of money to make money in currency. So what's this currency thing people are talking about? Oh, let's go and if you learn the currency trading and you want to invest, what exactly are you going to make if you don't do leverage or huge amounts of currency to trade currency? So what's this currency thing? That you make 25% of 100 is what? Let's calculate now. If you make 50% of $10, what's that? But if I make 1% of 1 billion, what's that? Scale is how you make money in currency trading. If you don't have scale, then what the heck are you doing there? Go do something else. Crypto trading, I don't really understand what they're doing. It's gambling, but they don't want to call it gambling. Don't make it sound exotic. So they say it's crypto trading. You are gambling on the movement of a security. There is nothing wrong with that. Most people that trade stocks are also gambling. Stock trading, money trading, it's all gambling. You are taking a bet on future conditions. You are taking a position. I get it. The problem is that with crypto, you are trying to trade in the market. You don't know what's going on. Look at FTX. We know it now, so we're talking in hindsight. But back then, did we know that these guys were doing all the shenanigans they were doing? So be a bit careful, right? I would say if you don't have the money, speak to an advisor and know exactly what you want to do. Don't just dive in because everyone is saying there's money in crypto or there's money in currency. Be very, very clear what you want to do. Do your risk protection. The financial markets are the only markets I have seen where you can go into and say, I only want to lose 5%. So you can actually go into the financial markets and say, I only want to lose 5%. And whatever the market does, you only lose 5%. You can buy a stopgap or a stop price. You can buy an option to reduce your loss. But if you don't know this, then why are you trading? So knowledge is what helps you make a profit, right? If you don't know, you can't make money. So thanks, Julie. I hope some guys got a few stuff. We're at 1:30. What about 30 minutes? I'm going to wind this down. Michael, what's up with you? You've been hopping in and out. M-E-E-B. I'm not calling your name. Michael Ebi. Go ahead, sir. Michael?
Okay. Yeah. I'm on now. So my question is about investing in a local business and investing in stocks. What are the returns? Like, for example, I have a friend who invested in an Indomie business with 25,000 naira. Invested in someone and he made like 40% of the money in just 2 months. So I'm trying to weigh the benefits. Which one is more profitable? Investing in local businesses like food commodities and all that. Considering this will consume people. Trying to see what's the difference, which will be more profitable. So that's my question.
Yeah. Michael, that's a great question, right? If I had to invest in a business or I had to invest in the securities that the business has created, which one makes me more profit? The richest folks in the world all own their businesses, the richest guys in the world. Venture capital has the highest return of any asset class, which means if I invest in a business and the business is profitable, I make more money. So venture capital has the highest returns. It's higher than anything, right? The problem is that business can fail. So it's high risk. Your friend has an Indomie business, the business can fail tomorrow. Last man can come, or is it Kai can come tomorrow and package everything he has, and it's all done. But when you buy, say, Dangote shares, yes, you don't get the returns of Dangote himself, but at least you're buying into a quoted company, blah, blah, blah. So it has to do more with the amount of risk. Because there's more volatility in venture capital, they make a lot of money. So if I invested in Google, today I'm a billionaire. But if I invested in all those other companies that crashed, my money has gone. So investing in venture capital or a business has more return, right, than investing in the shares of the business. But it also carries more risk. And you might not have the time. Remember, if I want to trade, someone had asked me a question today about exports. If I want to do exports, I don't know anything about exports. I can go and export yam to EU and they reject it. But if I invest in an exporter that knows what he's doing, I will not make 100% gain, but I'm invested because the guy knows what he's doing and I can make a return. So the answer is yes, you get a higher return, but with that high return comes you have to have the knowledge and the expertise to run the business. Not everybody is called to be an entrepreneur. To be an entrepreneur, you need some particular skills, visioning, managing with teams. All that is very, very important. And if you don't have that, you're going to be in trouble. So it's left to you. If you want, I would say, don't leave your day job. Invest first, learn the tricks before you go out and become an entrepreneur. That's what I would say. Make sense?
Yeah, it makes sense, Carlo. Thank you very much. One last question. It's regarding crypto. So regarding crypto, like the crypto
Yeah.
market. For example, let's talk about Ethereum. For example, Ethereum. We know Ethereum is an ecosystem of decentralized products. So there are different products launching on Ethereum right now. So wouldn't it be safe to put something very small, very tiny in some of these products? I'm not talking about the high risk products. I'm not talking about something that it's tangible, something that it's variable. Like for example, there are different media, decentralized entertainment stuff that are going on Ethereum right now. Wouldn't it be safe to just at least have just a tiny portion of your investment in that? Just even though we call it gambling, it shouldn't be safe to gamble a very tiny percentage of something in that, since it's something decentralized and it's not the Bitcoin hype.
Yeah,
It's Ethereum and it's a community and things are going on there. So that's my last question. Thank you
yeah,
very
I
much,
get
sir.
your question. Yeah, you're trying to dress it up to justify why you should gamble. There's nothing wrong with that. I, for instance, always have like a 1% that I use. I call it my Vex money. That's my money I take bets. I don't think if I lose that money, I know I'm going to lose it. I don't care, right? I'm trying to invest in something that can just to test out the market on something. You can do that. There's nothing wrong with that. There's nothing wrong with that, right? God, my daughter. Okay,
Okay, sir. Thank you very much for all you do.
so
Thank
my,
you. Your insights have helped
Michael,
me a
the
lot.
answer is
Thank you,
this,
sir.
right? There's nothing wrong in that. just don't justify that you are investing because of the cryptocurrency, because of the centralized exchange. No. If you say, I want to invest in this because I think there might be future tomorrow and I'm taking a bet today, there's nothing wrong with that at all. Know how much you can, if you're putting money in, it's one that you think that if you lose, it won't affect your portfolio. You can put it in and then see what's going to happen, right? And then you know that's exactly what you're doing. But it's not going to be like, oh, I'm investing because it's decentralized. What does decentralized mean? Doesn't mean anything. What does white people mean? Doesn't mean anything. But you can take a bet on an emerging tech that sounds silly, but later on could become very, very big. You can do that. What's wrong with that? Just keep it very, very small. Know exactly what you're doing. Know your exit path and all that, right? All right. Thanks.
Thank you so much.
Let's get Ibekwe. Hi. Ibekwe. Hi, Ibekwe.
Hello.
Yeah, go ahead.
Yeah, Carlo, good evening. Can you hear me? Hello, can you hear me? Hello?
Ibekwe, hi, you got the floor.
Yeah, good evening.
Yeah, go ahead, sir.
Okay, so I've been following you for a while now, and I've been carefully listening to your section. So, for me, I have been exposed to the ecosystem of investment right from after the university days. I'm talking about 2027, 2007 and beyond. So I've been able to invest a whole lot because at the time it was all about buying shares. The bank we are doing IPOs, a whole lot of companies were doing IPOs, and it was more like the in thing in Nigeria at those times. So I was actually investing a whole lot of my money. My salaries at the time, almost half of it was going into buying shares, trying to be sure that I have a footing for having some investment. But believe you me, you know what happened afterwards? The event of 2012 crashed everything. As I talk to you, are you there?
Yes.
As I talk to you, I invested over 1 million naira as of 2012 in shares, and and thereafter, I went to my stockbroker. I said, "Let me have my summary. What's left of me?" They printed my statement. It was 60,000. It was heartbreaking. It was mind blowing, and thereon I suspended anything that has to do with investment in shares and stocks and all of that. But then I didn't relent. Fast forward again, I mean, I got into the event of doing what they call trading, the trading of forex. I got into learning the stuff. I invested my time to learning, but I never put my real money into it because it wasn't clear to me what's happening there. It was more like a gambling, like you said. The risk was so high. So that was that. Then fast forward again for Bitcoin came in. Of course, I put in some money in there, and it was really cruising for me to the point of having $20,000 in my wallet, and it was good. And then just a trade wiped off everything. I have less than a Bitcoin in my wallet. I suspended everything about Bitcoin and all of that. So what I'm trying to say is that it's good to talk to people about get into some of these things, get in there, do it and do this and do that. But from my experience of about 20 years trying to do stuff in investment, do stuff in trying to build portfolios, it really has not given me a confidence to say this is a good way to go. That is sharing my experience. I'm not trying to ask you any question on this, but my question to you now, I am an entrepreneur who has, to the glory of God, is on I have a projection on that on every year we move up to 20, 30, 50% in turnover of our investments, all right, in our sales. So, but then what I do needs money. I borrow from banks, I borrow from friends, I put money back from sales. I need money to make more money. So now, what advice would you want to give to somebody like me in my situation? That because I need more money to do my business, how do I begin to think of investing? Where do I invest? Because the more money I put in my business, the more money I make. So it's a dilemma. Do I need to pull money and invest? Where do I invest it in? Or do I keep on to growing my business to the point that it becomes a multi-million, billionaire business? That is one question. Then the second question is, you say something about real estate business in Lagos. The yield is not as fantastic as combining some other cities that are not a highbrow city, like probably Benin City or Enugu or whereabout. But the point is, I have friends who are in the real estate business in Lagos. These guys will get land, build in a year. They can build like 20, 50 units of maybe 4 bedroom duplexes and sell off. And they confidently tell me they make as high as invest about 700 million and make about 200 million in a year. So can you say that the yield is low for that kind of real estate part of that part of real estate investment? So these are the two areas I want you to touch on my concerns. Thank you.
Yeah, thanks, Ibekwe. If I don't answer, please make sure you remind me. I was trying to write them down. So let's look the first one, right? You invested in assets, in shares back then, and you lost all your money. So respectfully, I'm just going to say respectfully, right? So if you buy the best black and white television company in the world, you will lose your money because you're buying black and white television, which is not, it's not, no one watches black and white television anymore. Do you get the point I'm making?
What do
Zenith,
you mean by black and white?
nobody uses black and white television anymore. So even if you buy the best black and
Oh,
white television, nobody will buy it. You get what I'm trying to say?
oh, okay.
Zenith Bank also sold their shares today. I think Zenith Bank, without marketing them, I think they're pretty good stock. Dividend yield is high. The stock has been good. So if you bought Zenith Bank shares back then, would you have made a loss today? I doubt it. I doubt it. So the point I'm making is that it's the shares you bought, not that you bought shares as a problem. It's the shares that
No,
you.
if I'm telling you about these shares, I'm talking about blue chip. I'm talking about Dangote because Dangote Dancer roll out IPO. I'm talking about First Bank. I'm talking about Zenith Bank
It's
and
not
all of that.
the same shares. If you do your analysis right and you plug in your bonuses and your dividends back into that portfolio, you didn't make a loss. If you bought Dangote, are you saying you make a loss on Dangote shares today? Dangote shares made Nigeria the number one stock market in the world 2022, 2020. There's no way I made a loss on Dangote. No way.
Okay, what I will do is this. I told you the last time I checked my statement was about more than 5 years ago. Maybe I'll call the stockbroker again to let me understand what my portfolio is all
Also,
about again. But I lost interest. I didn't want to get involved again.
I,
I didn't
I,
know all these
wait,
details are
wait,
telling me about again.
I got you. So what I'm saying that when you want to check your balances, make sure you use a software that you can put in your bonuses and your dividends. That would give you your real average prices. If you simply carry your historical cost, you haven't really adjusted that historical cost for the returns you have made on dividends and bonus. When you make a dividend and a bonus, it drops your purchase price. It drops your average cost. So when you look at your total return, it's actually doing better. So make sure you use an app that can do that for you to do a proper return on that portfolio annualized. Let your broker do
Okay.
that annualized. You get a different number because if you bought those blue chip stocks and you are quoting Dangote, First Bank had a bit of a problem, right? But if it's Dangote and the rest, those things have done pretty well, right? Boa Sugar, they've done pretty well. Those are the top three in Nigeria in terms of capitalization. So I'll be surprised if you made a loss on that. But do it. If you want to talk to me later, let's talk. But yeah, do that and let's come back, right? Your second
Okay,
question,
that's fine.
your business and running shares. I mean, Warren Buffett's business is buying shares, but his business is Berkshire Hathaway. Do you get the point I'm making? Your business
Okay.
generates revenues for you. You don't have to buy shares if you have a business. Nobody says you should go and buy shares. The folks like us that buy shares are because we can't start a business. So we then invest in you that can start a business. So we invest in Tesla. I can't build an electric car. I don't know what a battery is, but I can invest in Elon Musk to build a Tesla. Then I then get passive income of Elon Musk. So if you have a company where you are making returns and a profit, why are you buying shares? Invest in your company, but diversify away from your company.
Okay.
Well, so when you invest in your company, that is remember I give you guys 4 boxes: active income, number 2, passive income, number 3, non-discretionary income, number 4, discretionary income. The company that you have invested in, your own company, is your active income. You have got to be there to make that money. When you make that revenue, when you pay yourself salary and dividends, diversify away from your own company and buy your protection. So you can buy a bond, you can buy property. That is your diversification using the revenues from your business. So when you get money, you invest in your own business, then you take the returns from your own business, pay yourself and invest in passive income away from your business. But your business is separate from you. It is then reinvesting your new retained earnings. So I
Mm,
numbers. Your business makes 100 naira profit. Out of the 100 naira profit, you pay yourself 10 naira. With that
mm,
paid yourself, you go and buy your property, you go and buy your shares on you with your name. But your
mm,
business can reinvest the 90 back into the business
mm,
to grow that business to give you 15 naira tomorrow, to
mm,
10 to 15, next year to 20, at a point. So your business is always paying you 10, 20, or 40%. That is what you are
mm,
using separate from your company, right? So you've diversified using the revenues of your that being the business owner. So you are living your life
mm,
using the revenues. So you don't have to, nobody says go and buy crypto. No. If you have a source of income, if my source of income is pure water, I sell pure water, I get money, right? I take my pure water and
mm,
I buy like Coca-Cola. I buy a house. I buy a private jet. From the revenues,
mm,
so I'm diversifying more passive income sources from that one source that I have. So that I have
mm.
a balanced view, right? That's what I'm trying to do. But I mean, make sure
Okay.
reinvesting the retained earnings to keep on growing the scale of my business. The number one source of wealth for billionaires is their venture capital and their owned business, not stocks. Warren Buffett is
Mm,
rich. He owns Coca-Cola. It's because he owns Berkshire Hathaway, the company.
mm,
Right?
mm.
Okay. Which
Yeah.
one talk about?
Okay.
Talk about the Lagos houses, right? When I said
Yeah.
the yield, what is yield? When we're talking about yield, yield is what you put in, what you made over what you put in. Let's say I buy land in Lagos for 1 billion and I build a house for 1 billion. That's 2 billion, and I sell it
Mm-hmm.
for how much? 3 billion. I've made 100%. So the yield is good because I sold it right for the 3 billion. I'm talking about the rentals. If you take that 2 billion and you rent the house out, what's the return? What's the rental from that 2 billion? It's not up to 10% because the cost of the land, the cost of building that house in Lagos alone is very expensive. Lagos, Abuja, some parts of Port Harcourt, very expensive. That when you try to rent it out, you make very, very low yields. That's what I'm talking.
Mm,
Same with you might actually build that house and struggle to sell it. There was a time I saw a report that lots of luxury homes in Lagos were unoccupied. Luxury homes are not
mm,
they're unoccupied because no one has dollars to pay. So the rental yield on those properties as well is very, very low. We're not debating the value. The value is high. That's not a debate. We're debating the returns on those properties. If you took that same amount of money and you bought low risk federal government bonds, which I'm not suggesting you do. I'm comparing yield to yield. Those bonds for the federal
mm.
government pay you more than the rental property in Lekki. That's what I'm saying. So I'm saying be careful about investing in property to make a return that does not beat not inflation, but the risk-free rate. All of them don't beat inflation.
Okay.
Government bonds are not beating inflation, but your own property return is not beating inflation.
I get it now. I get it. What it means is that anybody buying land, building house, reselling, selling afterwards, actually in business and not in investing.
If that's your business, don't If that's your business, that's your business. You incorporate a company, you get certain advantages, that's your business, right? If I
Okay.
in you, I am an investor, you own the business. So
Mm-hmm.
someone owns Cadbury. I can buy Cadbury shares, I can buy Tesla shares, but someone owns Tesla. That
Mm-hmm.
Tesla is the entrepreneur, the investor. I can invest in and buy Tesla shares as well. We are two different motivations. He has more shares than I do. That's why he owns it. But I also gain the passive income from him. So I'm saying if you have a business right now that is paying you a return, okay, and you can do more in your business, then why go buy someone else's shares? American companies or growth companies do not pay a dividend. So Tesla does not pay a dividend. Microsoft didn't pay a dividend for years. The growth companies, Google, they don't pay a dividend. Why? Because they are reinvesting the profits back into the business to grow the business. Same with you.
Mm-hmm.
If you have a business that is returning you, because in the end, you have to look at the yield of your business. If you have a capital, you put in ₦1 million into your business, it returned you 40%. That yield in your business is more than the federal government return, it's more than inflation, it's more than stocks, it's more than bonds. So why would you then take money from your business and go and buy stocks? It doesn't make any sense. You can only
Mm-hmm.
invest into your business to get the 40%. Then what you are paying yourself as your income business is what
Mm-hmm.
you go and buy the stocks that are even giving you less yield because you are buying it to diversify. Your goal now is not the return, but to diversify away from having just one income source, which is your business. Make sense?
Yeah, it does. It
All right.
does.
Excellent. Good job.
Yeah, it does.
All right.
Okay, thanks.
Why-
Thanks, I appreciate it.
We've got Ola, we've got DJ, we've got Jai Capital. All the guys, we're going to get everyone now and then we'll just wind down. Jai Capital, hi, how you doing?
Hey, good evening, Mr. Kalu.
Hi, what's up, bro?
Fine, fine. Thanks for the space. I've really learned a lot.
Yeah, man.
But I would like to get some clarity on this. In the context of a 21% inflation rate,
Oh,
which of this is better? A federal government bond of 16% or a rental property with a yield of 10%?
yield, when you compare yield to yield, you have return. So the higher yield is always better. In terms of yield, I caveat. If you are giving me two yields, you are asking me to look at the yield. So yield is always better if you are talking about yield. So the answer is right there, yield.
Thank you.
But then
Okay,
again,
thank you.
let's now one question. Should I invest because of yield? The answer is no. I cannot and should not invest because of yield. I have to invest based on my tips. So even though something has a higher yield, does not mean I invest in it. If I invest in cocaine, the yield is higher than the yield of federal government bonds. Should I buy cocaine? No. If I invest in Tesla and the yield is higher than Coca-Cola, should I go invest in Tesla? No. I have to invest according to my objectives. Why am I investing? Is it to grow my capital appreciation? Is it to preserve my capital preservation? Is it to create a dividend income stream? Is it to hedge against the currency? If you get why you are investing, then it's easier to then say, I want to invest here because I want to do this. So you can't compare simply the yield of government bonds and the yield of equities. That would give you half the answer. You have to ask the second question: why are you investing? If it's a 60-year-old guy, whatever the yield on the property, that might be preferable to him because he can't take risk. Make sense?
So, yeah, makes sense. But for instance, now, if I'm trying to preserve my capital and also trying to make passive income,
Uh-huh.
yeah, with the context of the 21% inflation rate, which will you suggest?
Between what and what?
Between the federal government bond and the equity?
It depends on how long you are investing, bro. Again, same reason why. So equities do better when they have a long time to run. Bonds are more or less, you are investing in debt. So you are asking me to compare debt to equity.
Okay.
Debt is fixed income, fixed. So that means if I'm getting 10% coupon, I'm going to get 10% coupon. It cannot grow my principal. It can return my principal to me with interest, but it can't grow my principal. Equities can grow my principal and can lose my principal. If I buy shares, I can make 100% or I can make 0%. If I buy bonds, I can only make the 10% coupon or whatever coupon is quoted. So there's no right, you have to compare an orange to an orange, right? There's no other way you can compare two asset classes unless you are doing the yield. But if you are doing the yield, that means you have agreed that you want to do income. Hence, you're looking for the higher income, right? So you can't compare two asset classes because they are different. But if you ask me between a bond, corporate bond, and a government bond, which one should I buy? I'll say, oh, buy this one because it has a higher yield and lower volatility. But if you ask me, should I buy debt or equity? These are two different things. We can't compare a car with color red. We have to compare like for like. So the answer really has got to be with what do you think is going to happen? If you think that the interest rate in the economy is going to go up, which one benefits if it goes up? Bonds, because they are fixed income, right? So you can trade up. If you do short-term bonds, you can keep trading up and making a higher short-term return on your fixed return. Equities, those companies have to borrow money to invest, which might be harder for them. So they might struggle. So there's no, you have to, so Jai, you have to compare like for like. Does that make sense?
Yeah, I understand.
Excellent. Thanks so much.
All right, thanks.
You're welcome. Trader Not Professor, how you doing? Winding down, guys. Trader Not Professor, what's up?
Hello, good evening, Mr. Carl.
How you doing?
Can you hear me?
Yes.
Okay, I actually picked the mic when Ibekwe was speaking because I think I tweeted that I wanted to share an experience that could help his position as well. But you did justice to what he's going to say. I think I will share my experience, but this time around I'll make it brief because it could also help other people as well. It's something I've not shared online a lot. Mr. Bepo, what you asked, Mr. Carlo answered your question very well because irrespective of the amount of money you're getting to do your business, it's good to diversify because any day, anytime something could happen to your business and you don't know. That's what Mr. Carlo said the other time about forex traders and making promises and all of that. See, I'm not going to be protective here. I'm going to share my own experience because I'm also a forex trader. At least I've been I have a lot of experience, but at that point, I had to get some money. I accepted some friends, you are doing well, that kind of thing. Friends like, you're doing well for yourself and all of that. So can you help us trade and all of that? What can you offer us? So I made them an offer actually at the end of the day. And the truth is that what happens is that when someone tells you about Forex and all of that and say you should invest this amount, that you're going to get a certain percentage. See, the truth is that, like Mr. Carlos said earlier, there's nothing like certain percentage in Forex. I've been in this over a decade. There's nothing like certain percentage. I agree. That was where I know very well the time I made them that offer. Personally, sometimes I trade. There's no month I make less than, let's say, 50, 80% of my profit. Sometimes I go as high as over 100% a month. But you know what happens? When I made that offer, it brought another level of burden and responsibility to me and all to even approach the market the way I should feel much more relaxed before. And before you know it, I started making losses sometimes. And then at some point, I got negative. I even almost lost myself. You can imagine, despite my years of experience, I almost lost myself. At some point, it went negative losses and all of that, and I got into debt. When someone tells you about trading and income, please run very far away from that. Even me as a trader, I'll tell you that run very far away from it. It's better if you feel that person is so knowledgeable, you can tell the person to make you understand this or teach you rather than trade for you for a fixed percentage. And also, no matter the business you're doing, always diversify. It helps a lot. I know when I got into issues, my savings I had in crypto and all of that helped me at some point. And so it helps a lot. Outside that, also diversify your offline real estate, a lot of things. So Mr. Carlos, this is actually doing a lot of justice this evening. And thank you a lot, Mr. Carl, for organizing this space. It's really educative and it's appreciated.
Thank you. I appreciate that, sir. Yeah. Yeah, good points there. So let's just wind down. Willie, I've got Willie. Oh, Willie, did I hit you off? Willie, if I can. what's the name? Willie underscore Fide. Willie Fide. Did I get that right?
Yeah. Yes, yeah, that's correct. Good evening.
How you doing, sir? Ola, I'm coming
I'm
to
fine. Good evening.
you. Yeah, go ahead.
Huh?
Go ahead, sir.
All right. A brief one. Uh, where I work, you know, I work in the power industry. I discovered that since June of last year to date, my company has not remitted anything to my RSA, and it's worrisome. I don't know.
Yeah.
How do I go about that?
Oh, very easy. Go and report them to PENCOM. It's a big offense, right? If you report them to PENCOM, PENCOM make them pay with interest to your account. It's a law, so it's not an opinion. They have to pay by law. That's 18%. You pay 8, they pay 10 by law. It's like them owing you salaries. So you can just report them anonymously to PENCOM. PENCOM will send someone to come and investigate. They will pay back with what's called with interest paid to you. Just see if you can get someone to go report them because they are owing you. Because if they debit you, have they debited you? Did they debit you?
Yes, yes, they do the deductions and
Uh,
everything.
so that's double wahala. So that's an easy one. I know where you work. I know, do you work for a private company or you work for like a public guy? Where do you work? Is it public or private?
It's public and private because it's 60% privately owned, then 40% uh, for the government.
I would say go and report them. That means that's easy. Just go report them. See if you can do an anonymous report to PENCOM. Get your statement first of all, and ensure that what you have is latest. Then send a tip to PENCOM and say these guys are debiting our salaries, but they haven't remitted. Let PENCOM take care of it for you. Yeah, they actually have
All
companies
right.
that go around trying to find companies like this. And if they find a company like this, the PENCOM pays them a commission. So, I mean, yeah, try to report or try to Google the agents and report them so that I can come and take care of it for you. All right, man.
Okay. Thank you so much, sir.
All right.
I'm grateful.
Thank you. So, Ola, yeah, last caller. Thank you for hanging in there. Ola Malik 18. How you doing, sir? Go ahead. The last guy. Hello. All right, Ola. So, guys, thank you so much for hanging out on with me. I think we spent 10, 11, 12, about 3 hours today on just reviewing our investments and our portfolio in 2023. I think we tried to, we didn't want to do investment analysis, i.e., to tell you where to go and buy. I wanted people to ask questions and people to ask lots of questions, and we tried to the best of our ability to answer. So, thank you guys for hanging out with me. We're going to call it a day now. We're going to let you guys go enjoy the rest of your weekend. Watch the World Cup tomorrow. We hope France wins and all that kind of stuff. Right. So, guys, let you guys go. Get the book. Like I said, it's available on Amazon, on Roving Heights. Let's talk about your money. It's on my TL there. Also, the book has got lots of free articles. You can Google my name with that article and you can pick it up. My whole thing is just about educating you about money. I want you guys to get better at making money. I can't tell you go buy this, but I can tell you how to and what to watch out. So that's really what I'm going out for. So make sure you increase one key goal for you 2023. Increase your financial knowledge, right? The more you know, the more you are better at doing stuff. Money is you have got to study money. You can't say I know about it. If you're feeling too bad, you go to a doctor. If your tooth aches, you go to a dentist. Don't think you know about money. There are tax laws, there's way money operates. Always speak to an advisor, right, before you make any huge investments. All right, guys, thank you so much. Love you all. You take care. I'll see you guys maybe Monday or next Saturday. Have a good day and bye.